Hello everyone, welcome to another live stream. So please just let me know in the comments if my microphone is working well, because my speakers are acting up and I need to restart the sound card. So essentially, I think the mic should be working fine. Just put it in the comments if the microphone is working fine. So welcome to another stream. Let's get into the markets. If you're wondering why we are streaming so early, that is because we have a new schedule. It's working well. I can hear you clearly. Okay, amazing. Thank you. Thank you, Wham Bam. And this is actually the first time I see someone commenting on X. I saw maybe 1 or 2 X comments before, but the viewership on X is growing, which is great to see because I love the platform. So YouTube, you need to be kind of careful what you say on YouTube, or you can get demonetized. But X is you get much more freedom. So I like X. Anyway, new schedule, new live stream schedule. So the decision was, let's try to stream as long as we can. Let's try to do 2 streams per day per guest. So you can find the new schedule on the website. So you just go to the A1 live stream schedule. This is, by the way, a new schedule which syncs to your time zone. So pretty amazing stuff. It's still being built, but you can get a rough idea of the amount of guests and slots. So what's happening with the markets? I can see people want to see gold. People are talking about oil, nearly up nearly 5% on the day. Is it though? Let's see. So, well, I don't know what you're watching. My Brent is up 3%, actually a bit less because it's retraced now. So a tip is Middle East. If you want to look at what is happening in the Middle East, look at the price of Brent oil. Okay, not US oil. So not US oil, but actually Brent oil is a better indicator. Okay, Brent is up 4.5%. Okay, so you're looking at US oil. Sorry, yeah, that's a problem. You know, guys in the US, you will feel it. I know Europeans are already feeling the high Brent. They're already feeling the higher energy prices. I went to fill up my car. It was 1 point. So at the peak of the oil crisis, here it was 1.7 or maybe 1.8 or maybe even 1.9 euros per liter to fill it up. Then it went to 1.5 or 1.55 euros per liter, and now it's back to 1.6, maybe even 1.7 in some areas. So energy again going up. I think you know what to do. I think you know what to buy, what to sell. Essentially, it's all about the US dollar. So I'm betting that the CPI goes up. If we look at the CPI, so I'm betting that the CPI actually goes up. This is what we had. So we had 3.3, 3.8, 4.2%. That was at the top of the crisis. Then the Strait opened. The Strait was open at one point. Inflation went down, and then the Strait got closed again. So as the Strait got closed, inflation up, oil up. I think the Fed is going to have to hike. So I think the Fed is going to actually have to hike interest rates, which I'm a bit surprised, to be honest. I didn't think it was going to happen, but I didn't think I was going to have that sort of a stance. But with the recent developments, I do need to say that the Fed is probably going to have to hike. Okay, so yeah, let's see. So the target rate, it's going up a bit. The expectations for hikes, I think for September, were pretty much expected to get a rate hike. Yeah, 53.4%. That's interesting. So the main theme would be to buy the US dollar. To buy, let's say, USD CAD is one of the options that I'm personally looking at. You can also sell gold, which is actually up on the day. Or you can sell stocks if you want to. You know, that's what I think. Or you can buy oil as well. But personally, I think the effect will lag a bit. So as oil went up, I think the dollar will lag. So you get more volatility, you get more bang for your buck by by buying the US dollar. So the oil already made a move, but I think it's going to take some time for that move to translate into inflation, into CPI, into the Fed, into rate hikes, and then finally into the value of the US dollar right here. The yen is just falling. So the yen is looking absolutely horrible. I don't know why. It just cannot seem to catch a bid. The yen is just in the dumps. Crypto down on the day. Had a good day yesterday, but now it's down again. You can sell Bitcoin. That was an idea that I discussed with Alan. So yesterday, I think I talked to Alan, and we said, or he said actually, selling Bitcoin is not a bad way to go. I would agree. For my personal watch list, personally, I have USD CAD, which I want to buy because I think the Canadian dollar is going to be the weakest currency right now. The numbers in Canada are not looking good. The long-term data, the housing market is still falling. So the economical situation in Canada is really not that great. So I think buying USD CAD makes sense. Now I'm a bit hesitant still, so I'm a bit waiting on the sidelines. Not sure if I'm going to commit anytime soon. If I do commit, you will be notified in the A1 Discord. So quick plug, if you want to get all of my trades, all of my positions, you can go to the link in the description and you can use the code Marco to get a nice discount on the premium Discord. Alongside of that, you can even join for free. So let me grab my link for the free Discord. So let me just go to my files, links, free Discord. Okay, in the comment section, I'll post the link right now. So here it is, it's up. Just go to that link, join for free, and then later down the line, you can consider becoming a paid member and you can use my discount. Okay. If you have any comments, any suggestions, any charts you want me to look at, let me know. I know you want to see gold. Okay, but before I show you gold, I just want to finish with the watch list. So on the watch list, I have USD CAD and I have Swiss yen. Now, as far as the Swiss yen goes, I'm bullish on the yen. It doesn't have anything to do with the Middle East. I just believe that the pension funds in Japan will be forced by the Japanese government to basically sell foreign assets and buy domestic. So sell US bonds and buy Japanese bonds. Okay. Okay, so the effect will be that the dollar should lose a bit of value and the yen should gain a bit of value. Now, your first thought is, why don't you just sell USD/JPY? The reason is, I don't know when these pension funds will start buying and selling. I don't know when it's going to happen. So I don't want to get stuck in a position. I don't want to take a sell here, get stuck in the position for 2 months and pay a bunch of negative swaps. It's not something that I desire to do. So the best way to play it would be Swiss yen. So for the Swiss yen, I'm waiting for a break of the 200 level, if I'm being honest. I think the 200 level is key. I think we need to see it break. And then I'll most likely get in on a sell position. Now, this effect can be pretty large. So let me show you on Swiss yen. The October of 2014, the opposite thing happened. So in October of 2014, the Japanese government said to the pension funds, look, you guys need to decrease your domestic assets and increase your foreign asset exposure. So the opposite thing to what we're getting right now. Guess what happened after that? The yen lost a bunch of value. So the yen lost a bunch of value pretty soon after, in the next few weeks, next few months. So I'm betting the opposite happens. I'm betting this happens. Okay, because the opposite effect should happen. Let's repeat that. So a reduction in foreign assets and an increase in domestic assets. So a restructuring of the pension funds. Percentages will change, okay? If you want to know more about it, best way to go, ask Google Gemini. Okay, I'm sure Google Gemini will have an even better explanation than me, but to be honest, like AI software for traders, it has revolutionized the game. You know, for my personal research, I can now do my research in 3 minutes, and it used to take hours. Okay, I could get stuck in something for hours. Now, I'm not saying it's not beneficial to get stuck into something for hours, but you can use those two or 3 hours to do 10 times, 20 times more work. And also for like programmers, for building websites, absolute game changer. I know for Nick mentions it all the time. Like AI for A1 Trading Company, it like 5x or 10x their growth or their growth potential. So it's a game changer, you know. Apply the tools, because if you don't apply the tools, someone else will, and you won't make any money in trading. So, well, you can still make money, but it's going to be so much better if you just do your research using different tools such as Google Gemini. So go to Google Gemini, ask about the pension funds, ask about the Japanese government, ask about the effect on the yen. You will essentially hear what I said, but with a lot more detail. So yeah, those are the two things on the watch list. I know it's pretty flat. I know it's a pretty small watch list. The activity is low. There's not a lot of stuff to do, okay? And I know that's not what you want to hear, but let's look at gold. So gold is actually starting to look a bit better. It's starting to look a bit better. I made a reel yesterday, a short form, which did pretty well. You guys love gold. Okay, also let me just turn on my AC. Give me 1 second. It's getting a bit hot. So you guys love gold. The moment I mention it, or the moment I put it as the sort of the headline for the short form and the long form, it just explodes. So look, it's stuck in a range. There's not a lot of opportunities at the moment. If you're new, if you came into the markets last year because of gold, this is going to be a good lesson. So we are stuck in this triangle. We cannot seem to break out. We are above the 4K crucial resistance level. We are below the 200 EMA. Trust me, the 200 EMA is like the Bible when it comes to identifying a trend. If we are below it, it's usually a downtrend or a very, very range-bound market. So we need to cross above it for me to be really interested in bullish setups. This is a good time to see if the trend line will hold. That is completely true. So we are sitting right below the trend line. Today is the day, or this is the week. We either get a break or we get a retrace. But I wouldn't go in with a trade right here. I just personally wouldn't do it. I did buy the bottom on silver. I got taken out, unfortunately, before the rebound. So I did try it with small risk, but buying here, no, it's not for me. Plus, if I'm being honest, fundamentally, I'm bearish on gold. If the Strait of Hormuz remains closed, if inflation continues going up, if it goes above 4%, if the Fed actually hikes interest rates, which I think is going to happen, that is very bearish for metals. Hiking interest rates is bearish for gold, is bearish for silver, is bearish for copper, is bearish for platinum. Okay. So fundamentally, I am actually looking for sell setups. So let me give you some scenarios of what we can actually do here and not lose money in the process, or maybe not lose a lot of money in the process, because trading win rates 40%, 50%, that's kind of the industry standard. So you will lose money. Half of the time, as a trend follower, you will actually lose money. The ideal scenario for me would be to see a break of the 4K level and a convincing break. because fundamentally I am bearish. Now, what would be great to see as well is the top setups giving me a print. So gold, neutral at the moment, but if this goes bearish, it'll be a no-brainer. No-brainer. I'm there. I'm opening my interactive brokers. I'm putting in a sell, opening my FTMO, putting in a sell, Darwin X0, opening a sell, Alpha Capital, opening a sell, everything. I'm selling gold on everything, okay? It will be a perfect scenario. By the way, if you do want to get the Edge Finder, it is currently running at 45% off. So this software, for me personally, it was a game changer. I started to implement it late 2024, early 25. My results really, really improved. So I'm a big advocate. I'm one of the, not the first users, but I'm kind of the poster child for the success of the Edge Finder because it's really a game changer. So pros have the Bloomberg terminal, which costs like $25,000 per year. And we now have the Edge Finder, which is improving and increasing features every single week. If you want to get it, it's 45% off. So with the code Marco, you get 45% off on the Edge Finder. It is the biggest sale of the year. You won't get a bigger discount than this one. And the prices are going up in the next few months. So A1 Trading Edge Finder. Okay. The link is in the description as well, but you can just go to A1 Trading Edge Finder and use the code Marco to get 45% off. So that's the first scenario. That's the first potential trade right there. Second scenario would be that we actually break the trend line. So that this actually breaks and that we go up. I wouldn't buy. I wouldn't buy because we still have the 200 EMA and the 200 EMA is curving lower. It's like, as I mentioned, this is the golden rule of trading. Don't be a buyer below the 200 EMA. So you can do it if you have a big edge, but for most of you, it's not going to work. I would wait for the break of the 200 EMA first. So if we get this and we break that, it's a okay trade idea, as long as you have the confluence with the Edge Finder. So if this goes bullish, I'll take that as well. I would prefer to sell, but if this happens, I will go in with a buy position. That's the game plan. That's the summary. Be patient at the moment, unless you want to go into a massive drawdown, unless you want to get chopped up, be my guest. But if you want to play it smart, you'll be patient until you see a break of some key levels. Okay, comments. Let's see comments. See the comments. One opportunity. Good morning. I'm heavily in oil. Bought it at the absolute lows. Congrats. It's a good catch. In Germany, gas is 2 euros per liter, or diesel is 2 euros per liter. That is crazy. Hope you're doing good. I actually want to ask blah 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 blah. This is some sort of a spam. EuroCAD, gold, Euro Yen, Euro GP, gold to 6. Oil was up. Why is gold not falling? Look, in the markets, you get different moves that don't really correlate with each other one-to-one. On a day-to-day basis, the correlations can diverge. But long-term, the correlation should be there. So if you look at Brent, if it does long-term continue going up, if it does hit 100 or goes up even more, the correlation should be negative with, or should be opposite with oil, or sorry, with gold. So oil goes up, inflation goes up, Fed has to hike rates. Hiking rates is bullish for the US dollar. Hiking rates is bearish for gold. So if this goes up, gold should go down. But on a day-to-day basis, the correlation is not a one-to-one. It doesn't mean that if today is bullish, that oil is going to have to drop, or that if oil is up 5% on the day, that gold has to drop 5%. Doesn't work that way. Good morning, Mike Wilson. Hello. Generating liquidity for the gold rally. I love the Edge Finder. I use it multiple times every day. Me too. I'm with you. So if you want to get it, code Marco gets you 45% off. Link is in the description. Nick was bullish on gold. Okay, well, look, every single trader, we have diverging views, different reasons to buy or sell. That's why you have the market. You have buyers and sellers. So someone has to be a seller for you to buy, and vice versa. But personally, knowing Nick, I don't think he's gonna buy unless we get a break of some sort of a key level. I would say there's a 95% chance that he won't buy here because we are below the trend line, because the Edge Finder is neutral, because we are below the 200 EMA. So yeah, I would actually place money on that. It would be pretty fun to bet on Nick's positioning. GPUSD. Yeah, sure. I think GU is actually okay, what was this? Let me just hide that. This was a classic buy the rumor and sell the news. So you had a big move up. It was a big one. I did manage to capture a part of the move. I made around 3% on this move. So it was a pretty good trade. It was called out in the A1 Trading Discord. So all of the information is in the description. If you want to join, get all of my trades. Anyway, so for this GU right now, what should we do? I don't think you should buy. You had this explosion up right at the end of the move. Let's go to the 1 hour actually. So you had the uptrend, and then right at the end, you had good political news out of the UK. It was a classic buy the rumor, sell the news. So rumor was here, news came out, and we pretty much retraced most of this push up. I would be more interested to sell than to buy because I'm becoming more and more bullish on the US dollar every single day. I don't think it is the right way to go to pair the dollar with the pound. I think buying the dollar against the Canadian dollar is better, but GU, I would be more bearish than bullish. What do you think? So put it in the comments. What do you think? Are you bullish or are you bearish on GU? Edge Finder is very bullish. Personally, my view is a bit different. So I'm not going to use the Edge Finder as a confluence now. I'm going to wait. Maybe it flips bearish. If it does flip bearish, I will be very interested. Nick keeps changing direction every day. That is trading. That is trading. So the expression in trading is strong positions held weakly. It's not weak positions held strongly, because let me show you gold. If you were bullish, if you had a weak position of being bullish and you never changed your opinion, you know what would happen? You would take 10 or 20 losses in a row. Well, let me see how can I do this. But if you can constantly change your opinion according to what the market is telling you, you can actually make money. So I know a lot of the real traders online, so the fake ones, the sort of the shitty influencers, they will just say gold is always bullish, Bitcoin is always bullish, just buy, and you'll lose money, guaranteed. But the real traders, if you follow them for a long time, you will notice that they flip-flop very often. Not just in gold, not just in Bitcoin, in stocks, in Forex, in everything. They flip-flop. One day they're bullish, next day they are bearish. That is because they're following what the market is telling them. And it's the only way to make money. You need to be fast on your toes. You need to be sort of open to changing your direction, your opinion. So that is why, for example, I was super bearish on the US dollar here, and I made money. But I changed my view. Now, I would actually prefer to sell. Okay? So imagine if I just held my opinion of buying GU throughout the move. And imagine that this happens. I would lose everything that I made and even more. So I would be in a big drawdown. That's my best way that I can explain. All of the best traders, they flip-flop very often. That's what makes them profitable. Looking at the delta volume here, the gold breakout seems weak since the volume of the breakout is low. Could be the case. Personally, I don't know anything about volume. I don't follow it. I don't use it in my analysis, so I can't tell you much. I haven't done any back testing, haven't done any forward testing. USD CAD. USD CAD is my favorite thing to buy. It's on the list. Okay, looking for buy setups. Please change the cooler of the chart. Cooler, I don't have. I have actually a cooler that like a mini cooler, which I bring to the seaside. So it's only one color though. If you're wondering about the chart color, I won't change it because I like it. Too bad. What do you think about EuroCAD? I don't think much. It's not on my radar. GU bearish, as I shared in A1 Discord, but I missed the retest. Okay, hello Max. GU bearish. 0.35 retest. So I'm guessing you wanted to sell the 1.35 level. Would have been a pretty good trade, definitely. Are you looking for sell setups still? Do you still want to sell GU? I was a GBP bull until the news this morning. Did I miss something? Let me see. First, the calendar. GP CPI, yeah. Okay, 8 in the morning CPI, 2.6. Inflation is actually lower than expected. Interesting. That is very interesting. But that's a lagging print. That print is from when the Strait of Hormuz was open. That print was from when oil was much lower here. So it's a lagging print. Oil is back up to 90. Okay? So basically, I think inflation is going to trickle up again. I think the CAD inflation is going to trickle up. I think the pound inflation is going to trickle up. I think the US inflation is going to go up. Bad situation. Opinion on gold. Already covered it. If you want to rewind the stream a bit, you'll find it. If oil keeps going up, it's hard to be bullish on GU. Exactly. So GU, I'm more bearish than bullish. Opinion on the Nikkei. Nikkei bearish. Below the 20 EMA. Going down. Broke a key trend line. I don't like it anymore. In stocks, it's all about EMAs. So let me see the SPY. This is for my stock trading, by the way. ETF SPY. It actually closed bullish yesterday, but the pre-market is lower. Okay. So I'm in Best Buy, I'm in Crocs. KRC, I took a loss. So gonna have to remove that. Let's remove that from the list. I'm in 2 stock positions, but it's not looking so good because the SPY is below the EMAs. It's the 50, it is the 20, it is the 10 EMA. If it's above those EMAs, it's an uptrend. If it's below the EMAs or inside of the EMAs, it's flat or in a downtrend, and you don't want to touch it. Same rule for the Nikkei. So it's below the EMA, the 20, and it looks pretty bad. So I wouldn't want to buy that. Max says, I change my bias daily. A tweet can change everything. Absolutely. Traders need to adapt to changing market conditions. Absolutely, yes. Max is not looking to sell GU. Okay. If gold falls, what's your bottom? I don't have any targets for. Let's look at it. Okay. And then I'll pass the stream on to James. So for gold, if we actually break lower, I will look for sell setups. if we do break lower. The first target could be 3,800, 3,600, a round number, okay, some sort of a round number. The first massive support is at 35. So yeah, the first massive target would be 35. Personally, I wouldn't have a target. If I did sell, I would not have a target. I would just use a trailing stop loss. Okay, that would be my game plan. But that is it from me. I will now pass the stream on to James. Let me just find the transition video because I'm still getting used to this stuff. Thank you very much for watching. You can catch me in 2 or 3 hours during my second segment. I wish you good luck, and don't force trades in these market conditions. Markets are not conducive at the moment. Don't put on a bunch of trades. It's not worth it. It's not worth losing all of the profits you made earlier this year. Thank you. See you.
If you're looking to get funded and want to save big on prop firms, check out our website, A1Trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by 1-step and 2-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size, and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare 2 firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
Hello, ladies and gentlemen. Welcome to the stream, on my segment at least. Happy Wednesday. Hope you're all well. So, what's going on? We had a cooler CPI come out for the UK today, but other than that, relatively quiet. Not much to really discuss or keep up with. So what do you guys want to talk about today? So I've closed my euro pound and pound dollar positions for a small loss. Actually, there's about 1.5% loss. Nothing too crazy, but not ideal. Again, I've not had a fantastic month this month, but it is what it is. Part of the game. I'm still long on silver. Sorry, not silver. Still long on gold. So the positions I've got, we did discuss this yesterday, but they are more of an investment style, not necessarily a swing trade or short-term idea. So I'm quite happy to just stay in this position for as long as it may take. No rush, no care. So yeah, that's kind of it. Already getting asked about gold. Of course, everyone always wants to talk about gold. So yeah, I'll recap what we discussed yesterday. So we'll start from the beginning. Let's start with the scorecard. We'll go over what gold's fundamentals are at the moment. So gold is pretty much flat. We don't really have anything going on here. We've got a score of 2 on the edge finder, which obviously tells us the fundamentals just aren't really doing anything. We're not getting any real signals there. Let me just move my camera. I need to have a shave. I'm looking a bit like a homeless man at the minute. So technicals are completely neutral. Institutional positioning is neutral. Economic growth is very bullish. Inflation data is very bullish. Sorry, not very bullish, but bullish. And the jobs market is bearish. Now, there is a bit of a caveat with the inflation data. Again, as we've discussed, the inflation data did come out when oil was lower, as Marco said, and there is quite a lot of speculation about the CPI and inflation data coming back up. Obviously, we've had rises in oil, we've had re-escalations in the Middle East, and the Strait of Hormuz is closed. So the fact that the oil supply has now stopped again, and we're back in our oil reserves globally, it does indicate, obviously, that we're going to have higher energy costs leading into higher inflation. So there is that argument to be made, and obviously in that case, we are going to see gold continue lower. Now, we are seeing the dollar slightly stronger over the past couple of days, which again is natural on the back of higher oil prices, higher yields. So there is an argument really that gold can continue lower, which I think is completely valid. And I do agree with Marco. I think 3,500 is kind of a big target at the moment, is where the next level of support is. So if we end up breaking this level at around 4,000, the next real stop will be 3,500. Now, my goal is to buy up all of this downside, and I'm going to continue to buy the downside on gold, again, as more of an investment DCA approach, not as a short-term swing trade. The more drawdown this has, the better, because these positions will then get activated. I can manage my average price, and position sizes are extremely small. You can see 0.01 all the way down to 0.02. So the actual risk on the line is very minute, but the idea is to build up a position whilst I view gold as cheap. And then once or if it starts coming back to the upside eventually, then I'll have a very good average price in the long run. However, short term on gold, it wouldn't surprise me yet, as I said, if we do continue lower. This downtrend on the H4 is completely intact. There is no real fundamentals to warrant buying gold right now, again, on a short-term sort of swing trade or intraday aspect, in my opinion. You could, again, look at that weaker US data, but I don't really trust it, to be perfectly honest. I do believe that we are in for potentially more upside on the dollar. So something I've been paying attention to is the short-term technicals here, where we've got the fib from the low to the high. We are holding this fib zone, but this also lines up with the previous highs on the dollar. So this is a very typical break, retest, and we're still holding above, which is, again, a bullish sign. So I quite like that. And then we've also got this weekly time frame that is quite convincing for potentially a higher dollar, where we come down, again, we've discussed this for many, many months at this point across different channels, I think mine, Nick's, maybe other people's as well, where we come down to this trend line, and every time we have this really strong bullish reaction and a bullish cycle from this point. So I think we've got the technicals to support a higher dollar, and maybe the fundamentals to come once inflation reflects higher oil prices. So yeah, I wouldn't necessarily sit short on the dollar right now, which is another reason I cut my pound dollar position. So I would be really actually looking to go short things like euro dollar, pound dollar, and yeah, we'll see. Although I think pound dollar is a little bit more difficult. I would rather go in for euro dollar short. I think the pound is still showing optimism around the new political stability. Andy Burnham's come in. We've seen a lot of headlines by him over the past sort of 24, 48 hours. And some of his policies sound okay. I'm not going to go into this too much because it doesn't really matter to trade, and I don't think you guys care too much either. But, he's wanted to bring in more social housing. He wants to, make adjustments to the economy to be more beneficial for the cost of living crisis the UK is currently seeing. Things like reducing the VAT on energy prices, making public transport a bit more accessible and cheaper. So there are some things there that sound a little bit more optimistic, but then the problem is, he's increasing foreign aid, he's increasing the defense budget, but we just don't have the money to support that. So I think there is an idea really that we can continue to see the pound supported on the optimism, but it's not really changed my long-term perspective that the UK is in some serious trouble. So I wouldn't mind continuing shorts on the pound, but not right now. I think it's a little bit early. So yeah, if we were going to go long on the dollar, I think my default would be euro dollar shorts. And the technicals line up really nicely as well. So something we've been looking at, I think yesterday, was this euro dollar technical setup that we've got. So we have these previous daily lows. Price broke, retested. We've formed a bearish trend here on the daily. This very well could be a continuation to the downside pattern. I'm fairly sure. Oops, hold on. Let me switch tabs back. There we go. I'm fairly sure it's the fib level as well. Yes, it is. So it's a 50% retracement from the previous high to the low. So technically speaking, euro dollar looks fantastic, but the downside is the fundamentals are bullish. Or at least they were. Where is euro dollar gone? Yeah, here. So euro dollar is bullish. It's only got a score of 4, and it has dropped 2 points in the past 24 hours. So there is maybe an idea here, but again, it would be trading against the edge finder, which is something I don't really like to do. So I'm going to stay away for now, and we'll see how the developments go over the next sort of week or so. Okay, what's going on here? So thoughts on oil. Yeah, we spoke about oil yesterday. I don't really see a problem here. I think really, obviously, we're currently at sort of the main point of interest here. So obviously we came down, we've managed to break back above this previous level, fill the gap, and now we're at this previous support. So again, this could either be the break, retest, and continuation lower. I don't think this is the case, and the reason is because there's nothing changed. You know, the oil is pricing in again the Strait of Hormuz situation, which is still ongoing. So I don't see any downside in oil at the moment, unless we do get a development de-escalation type headlines coming out, which doesn't seem too likely at the moment. So I think really the base case actually is we break above, we potentially retest, and then we continue maybe towards 110 to 120. I would say that's kind of the base case right now. There is an argument actually for even higher oil prices, but for oil to break these previous highs and then continue to, let's say, 130, 140, maybe 150, that would require this war to continue going on, the Strait of Hormuz to remain closed, and for oil reserves to get depleted even more, which again does seem like the base case right now. But I don't want to sit here saying oil is going to 130 to 150 just yet, because, you know, headlines come and go. We could, you know, tonight get a headline saying that actually they're working on a peace deal, you know. So yeah, so to keep it simple and just to clarify, I do think oil is going to continue higher over the coming days and weeks, but again, it's really dependent on the headlines. We've fallen before moving up. On what, Prince Ed? On gold or oil? Gold pump coming? I would like to say so. Well, actually, no, I wouldn't. That's a lie. I would really like gold to continue lower. I think 3,500 would be perfect, and that's kind of what I've positioned for. So if we break slightly lower and come back on gold, so let's say, you know, we continue this lower time frame downtrend, reach 3,500. I don't know, false breakout, whatever it may be, that would be the best case for me, because then all of these positions get triggered and I'm long. If it rallies from here, yes, I'm in a position, but it's so small, it would be really frustrating, because, you know, I would get the direction right, the entry would have been great, but the positions are just so small here at 0.02. It's just a little bit, that would be, yeah, a bit of an annoyance for me. But as I said, I don't think the fundamentals really warrant gold rallying at the minute. I just don't see a reason for that to happen. But yeah, we'll see. So thoughts on NAS? Good question. So the US markets are suffering at the moment, and they're going to continue suffering until we do see the de-escalations in the Middle East. And the reason, again, comes down really to the Strait of Hormuz and inflation. So the markets will be expecting, or increasingly expecting, the Fed to hike rates, which is inherently negative for things like the Nasdaq, the S&P, and basically the equity and indice markets. So there is pressure there. But then I also think there is a little bit of pressure from the overvaluation of stocks. I think SpaceX was a little bit of a wake-up call for people. So if we look at SpaceX, you know, we had the IPO, there was mass euphoria, everyone was jumping in. It was a great time. I was sat watching this at the time, and people tweeting, retail investors mainly tweeting, everyone told us not to buy SpaceX, and now I'm in profit. And then very quickly it falls and completely destroys its IPO price and falls even lower. So I think this was a bit of a wake-up call in terms of the optimism around AI and the IPOs coming. You know, SpaceX was massively hyped up, and then, you know, we've got OpenAI. I think they're IPOing quite soon this year. I think it will be a very similar thing. We might see the IPO, massive pump to the upside, and then very quickly a correction back lower once people realize that actually these companies don't make money. You know, they burn money on it, millions of dollars on a daily basis. Do you really want to hold a company like that? No. And then the valuation of these companies are extremely high. I think SpaceX, $1 trillion valuation or something crazy. What warrants that? I don't think anything really. It's just the Elon Musk name by its side, and the fact that it's, you know, trying to reach Mars. It's like, realistically, the financials don't support that type of valuation. So I think we are in for some significant downside, but when that will be, I don't know. And at the moment, we are seeing these markets just completely sideways. So when it comes to actually taking some positions, the Edge Finder doesn't have anything for the indices markets, I don't think. There is no markets here. There's no Nasdaq, no S&P, no Dow. So that's quite a telltale sign. The fundamentals aren't there. The technicals aren't here either, because we are just stuck sideways. We've been stuck sideways here for when was this? May? Well, like 2 months. We've just seen no direction within the Nasdaq, and we are technically in a downtrend actually on the H4 with the moving average formation here. So I would be very, very cautious about trading. I think either looking for shorts on a break lower of this support, so something like this, break and look for the retest to actually enter short positions. That would be quite nice. Or maybe buying this low here, the support level. But to do both, you would need a catalyst. So you would need either significantly more hike pricing by the markets to drive the Nasdaq lower, and again, a bit of a repricing there, or we would need to see de-escalations and inflation expectations coming down for the Nasdaq to then maybe have a little bit of a catalyst to continue higher and break out of this range. Until we get one of those two things to happen, I just don't really see a world where it's worth trading these markets. There's a million reasons for gold to rally. It should never have had the big drop. That is an extremely what's a nice way of saying it? An extremely interesting thing to say. Let's say that. Why do you think there's a million reasons for gold to rally and it should not have had the drop? So I would categorically have to disagree with that. Both statements you made there. Gold and oil. We've done both gold and oil already, and we're only 15 minutes in. So I'm not gonna redo them again. So feel free to rewind the stream and have a look. Maybe I can go over them again towards the end of the stream if we run out of things to talk about. But yeah, for now, I'd rather move on to other things, cover a bit more of a variety of markets, and then yeah, at the end, if we've got some spare time, we can recap. So GBP pairs. Again, we kind of discussed the pound in general about the political and the short-term and longer-term aspects about, we've got clear optimism within the pound at the moment, or the sterling UK economy. So we'll take a look at what pound pair would you want to see? Pound yen, maybe? So yeah, we've got clear optimism here. We had the situation with Keir Starmer, and it was very much a case of, is he going to resign? Is he not going to resign? And that's what we call uncertainty in the markets. And the markets don't like uncertainty. They like to know what's going to happen. So that was a big headwind for the sterling. That was a big, okay, well, actually we're quite bearish at the moment because of that. But once we had clarity, once Keir Starmer did resign, and it was almost guaranteed that Andy Burnham was going to take over as PM, that's when we saw the optimism start, and we started seeing the pound begin to rally. Now, that's continuing because we've just had Andy Burnham step in. I think it was 24 hours ago, or maybe 48. It was quite a recent thing. He officially did become PM, and he started making changes. He's already made some, pitched some of his ideas and those types of things. So again, the optimism's there. However, the problem with the pound begins when you actually look at the long-term outlook of what is being said and what's been spoken about in Parliament at the moment, which is things like, the defense budget increasing, foreign aid increasing, things like this. And it's not necessarily that they're bad things. I don't have a problem with them. But the problem is, how are they going to get funded? The UK government is already in massive debt. It's already very cash poor. Taxes are already at extreme highs of recent history. You can't increase taxes to fund these things. So it's a case of, okay, well, if they get implemented, the average person's life short term will get better. Social housing will be, that's a good thing. People can afford housing, generally speaking, of course. But then the longer term problem arises of, okay, well, at some point you're gonna have to pay back that debt. If they do go down the debt route, which I think they would have to do these policies. How are you going to pay that back? Well, then you're going to have to raise taxes. You're going to have to reduce spending on public services like the NHS, which is already suffering. So there are all these things like, okay, yeah, short term, I think the policies are good. We are likely to continue to see a bit of optimism. But then long term, actually, these things are going to raise some real problems if they're not managed properly. And the fact it's the UK, I don't think they will be managed properly. So I know this is kind of longer term, a bit more detailed than maybe what most of you care about, but it is important things to know and understand. If you're in the markets, you need to understand these sorts of nuances and context behind economies. It's not just a case of, oh, GDP is high, it's good. It's okay, well, what's going on beneath the surface? So there are these things that are making me quite cautious. I think short term, again, I would just follow the edge finder. I suppose if you're trading a 1 week time or trading over a 1 week time horizon, you're just swing trading. It's not that important. But again, I like to try and give you as much context and information as I can when I'm on these streams. Now, if we strip it back to the basics, the pound is bullish. We've got pound dollar bullish, we've got pound Swiss bullish, pound yen bullish. We've got the pound, the individual currency is reading bullish as well with a score of 5. So I would be more than happy to actually just follow this, just again, keeping it super simple. So pound yen is something I've been watching. However, it's been a little bit difficult to get into. The technicals have been perfect. You know, on this bullish run that we've had, these pullbacks have been really measured towards the fib. I have failed to get into everyone, mainly because I just wasn't paying attention. So that's my own fault. There is another entry idea pretty much here because, you know, again, very simple technicals here. We've had the bullish run, or we're having a bullish run. We're in a bullish trend. Fib from the low to the high. Pull back into the fib zone between the 50% and 61.8%, lines up previous structure on the left. This looks like a really nice pullback to buy into. So maybe this will be worth taking. There's a little bit of a concern with the yen specifically about the intervention. Are we going to get one? Are we not? If we do, when is it? And how much will it be by? So that's a little bit of a, you know, one of those thoughts is like, if I buy pound yen, am I going to get stopped out tomorrow by an intervention that I could have avoided by just sitting out? Maybe. So that's one of those things I'm thinking about. So I'm just trying to contemplate, is it really worth getting into pound yen at the moment? Because I think with dollar yen, we're kind of seeing the same concern. I mean, actually, over the past couple of days or past couple of hours, we have seen upside. But generally speaking, on dollar yen, we've seen a lot of indecision. And I think it's basically coming down to that. I think the fact that obviously we've had a little bit of indecision with the dollar. You know, we've had lower or weaker data. We've still got the situation with Iran. You can see that actually reflected on the DXY here, where we've had a little bit of downside, but overall it's a bit more of a consolidation type move. Obviously, again, same thing on dollar yen. But I think with dollar yen, we're also expecting or waiting for that intervention. It's very much a case of, if you've got, let's say, 50 million, just for argument's sake, let's say you've got $50 million. Do you want to buy dollar yen at these levels? Well, yes, maybe, because the dynamic is good. You know, it's still a fantastic carry trade. But then if you account for the idea that we might get an intervention, and we are very deviated now from this 200 daily moving average, and every time, well, not every time, but when we do have these interventions, typically we will come down to this 200 daily moving average, and that's when we have the bounce. So I think there's more of a sentiment at the moment of really waiting to see, do we get that intervention? If we do, can we actually just buy it up at a cheaper price rather than buying it right now at a higher price? I think that's a little bit of a concern. So I know there's a bit of a ramble, but of course, you know, I'm on for an hour, so I like to have my little rambles and fill up some time, try and give you guys as much information as possible. Gold rally when interest rates begin to cut, not hold on rise. Yes. More wars, more debt, economies around the world slowing. Yeah, that's not really how it works. More wars. I think your point on paper makes sense, or on the face value makes sense. But again, you've got to account for what the context is. So yes, you know, the Iran situation, it is a war. And, you know, if you didn't understand the mechanics between oil and inflation, then you would have been buying gold this whole time, and you would have said, well, there's a war, it's risk off, let's buy gold. But actually, you know, again, we've got oil implications. So we've got less oil flowing, higher energy prices lead to higher inflation leads to higher rates typically, thus higher currency valuations, and then lower gold prices. Do you see what I'm saying? So it's not just a case of we've got wars, debt, and economies around the world. So, okay, well, what's going on right now? Well, the main focus at the moment is inflation and oil. Well, that's not very conducive for gold. So gold is lower. So yeah, I get where you're coming from, but it's not quite as simple as just saying, well, there's more wars, so we need to buy gold, and gold shouldn't drop. So yeah. Hey James, what's your thoughts on Euro Aussie? Yeah, we can have a look at Euro Aussie. I don't think we've looked at that one in a while. Just hold on, I've got a cup of tea. I completely forgot about it. I don't want it to go cold. The British don't like a cold cup of tea. Talking for an hour is quite difficult at times. Got to wet the whistle now and again. So Euro Aussie, let's see what's going on the Edge Finder. It's actually a little bit mixed from what I'm seeing already. So what we have, Aussie CAD, Aussie Swiss, Aussie Yen. So, and Aussie US dollar. So the Australian dollar is showing a little bit of strength, But then we're also seeing the same thing with the euro. We've actually got the euro itself reading bullish, euro dollar bullish, euro Swiss, euro yen. So yeah, overall, both currencies seem like they are quite supported. So let's have a look at what Euro Aussie is actually saying on the scorecard. So it's -1. So actually, yeah, flat. So what we are seeing again is kind of strength within both currencies. So technicals bearish, institutional positioning is bullish, sentiment, so retail positioning is bullish, so actually bearish for us. Obviously, we counter trade that. Economic growth is bearish, jobs markets and inflation is bullish. So that leads me into a position where I can't really do anything here, because if we've got, you know, neutral fundamentals and I'm a fundamental trader, there is no direction there for me. Now the daily time frame is in quite a nice bearish trend. What about the H4? What's going on here? Not too much on the H4. I suppose what we could do actually is, if the fundamentals aren't there, we could look more towards just a trend following a momentum type of trade. So in this case, we've got the daily bearish. The H4 is just broken below the 200 daily moving average. We've kind of crossed over on the EMAs as well, indicating that we are now back into a bearish trend. So there might be an idea of actually looking to go short on a fib pullback here towards 50%, stop loss at the high, and then maybe just a trailing stop, no hard take profit. The fib zone kind of lines up here with previous structure as well. So again, giving us that break, retest into the fib and continuation pattern. Now this is purely on technicals. Again, I don't trade technicals alone. I like to match the fundamentals with the technicals. So this isn't something I would take, but it's kind of all I'm seeing at the moment if we really try to force an idea. So there you go. Thoughts on New Zealand yen, New Zealand Swiss. Okay, yeah, we can take a look at those. Let me just catch up on some messages. Is this more for long-term swing trades? Yeah, typically when I'm doing, when I'm showing my ideas, it's normally on the H4. So it'll be maybe for 1 to 2 week type trade ideas. There'll be rare times where I talk about more multi-month ideas, like what I was doing on gold. But yeah, typically speaking, when I'm showing you an idea, excuse me, you can expect it to last for, yeah, maybe 1 to 2 weeks typically. Maybe longer, maybe slightly less, but that's the general time horizon I have for my positions. Hi, James. Let's say you're down 0.5 in a position. During the trade, the edge finder turns its score. Do you exit at 0.5 or let the trade run? So if I'm already down up on a position, and let's say, yeah, okay, so let's say the edge finder has flipped the score. Yes, I will try to close it at the minor loss. It normally slightly depends on exactly what the context is. So if I've got more of a outside view, so obviously the edge finder is sort of the hard fundamentals, but let's say I'm trading something else. So maybe it's the central bank interest rates, or maybe it's a carry trade, something like that. Then no, I won't, because the edge finder won't reflect exactly what it is that I'm trading off. But if it's just one of my day-to-day trades where, yeah, you know, the edge finder is bullish or bearish, I'm in a position and it flips, and yes, I will close it, because that's the general workflow and framework of my positions. Okay, so New Zealand yen, New Zealand Swiss. I think both really are just good buys. Both are pretty decent carry trades, really. The trends are bullish on both of them. I wouldn't really say going short is a good idea. So on both, we're kind of seeing this, you know, double top type pattern. So let's see, what do we have? Yeah, I suppose it depends really where you want to draw your fib from. I would normally take the previous low to the current high. So in this case, yes, I would be looking for some sort of 50% pullback, come towards this 200 moving average here, and then maybe a continuation, break, retest, and then again a continuation from there. That's kind of what I would look at on New Zealand yen. But again, it comes back to what I was talking about on pound yen and dollar yen about the potential intervention by the MOF. Now that hasn't happened yet, so I wouldn't completely write off being a buyer of yen pairs, because eventually, you know, it's very possible you would just give up a lot of P&L just waiting for something that might not happen for the next couple of weeks, maybe a couple of months. But it is something you need to be aware of. So with New Zealand yen, again, I would default towards being a buyer, but cautiously. New Zealand yen, exactly the same thing. I would look towards being potentially a buyer here. However, one of the downsides with the Swiss pairs is the higher time frame downtrends. And this is something we've been paying attention to quite a lot, specifically with pound Swiss. So pound Swiss is currently bullish on the edge finder, but the overall movements of the markets on the weekly and monthly timeframes is to the downside quite drastically. So as we can see, this is New Zealand Swiss on the weekly time frame. Being a buyer really isn't that successful. So, you could at times be a buyer of these lows and you could make some pretty good money on the pullbacks. But generally speaking, you want to be with this downside. So I wouldn't really want to be a buyer of New Zealand Swiss, actually. So what I'd rather do is wait for something to happen here, whether we come up and reach this 100 daily moving average, weekly moving average here, like we've done previously. That could be one approach, and that's kind of what I would want to look for. The downside is, or the nuance or the context here is, you do get paid quite nicely to be a buyer of New Zealand Swiss. Again, on the swaps, being a seller is more profitable on the downside trend overall, but it is more expensive on the swaps. So you've got to figure out exactly what your priority is. But yeah, that's my 2 cents. New Zealand Swiss, I actually don't personally have any real bias. I'm not really looking to trade this market. Yes, no cold tea. Is it Yorkshire or Tetley? Obviously Yorkshire. I do not buy any other tea than Yorkshire tea. I'm not really, I don't really give in to brands and things. I'm not a huge snob or anything when it comes to brands, but with tea, it has to be Yorkshire. It's one of the only things. And coconut water as well. It has to be Viva. But yeah, I'm not a huge brand guy. It's like coffee, for example. I'm not you can give me 5 different brands of coffee. I probably won't be able to tell the difference between any of them. And maybe wine. Actually, there's a really good, and I'm going a bit off topic, but again, I've got an hour to fill, so bear with me. Let me just have my little talks now and again. There is a really good cheap wine. I can't remember the name of it, but it's like £7. It's really cheap, but it's one of the nicest wines I've ever had. I'm not a huge brand guy. I think really with wine, it's more of a status symbol. It's like, if you're buying the $1,000, $10,000 bottles of wine, it's not actually necessarily going to taste nicer. It's just a status thing. So I'm quite happy buying a cheap bottle of wine on a Friday. But anyway, let's move on. We don't condone drinking here, guys. Traders, keep your minds clear. Don't consume anything that's not raw foods and water. Anyway, what are we talking about here? Yo just got stopped out on the DAX. Oh, it's a rough one. Yeah, I'm going to be honest, guys. If you're having a rough month, please don't feel bad. This month has been actually my worst month of the year so far. It's really not been good. Pound Aussie I had to close Pound Aussie because it was in a loss and it just wasn't working out. Pound dollar loss, Euro pound loss. What else was there? Oh, I got stopped out on oil, break even. Oil was a really good position in hindsight. I was long here, right on the break, got stopped out on the wicks down here, and it's rallied. So I missed that trade. There was a Nikkei trade that got stopped at break. It's just been one of those months where I just cannot catch anything. It's just been such a frustrating month. And it's what makes it worse is June was June was actually one of the best months I've had in a very long time. And then that follows straight into one of the worst months I've had. So it's like, you come out of, I come out of June feeling on top of the world. So great month. What a month that was. Fantastic. Go into July, so optimistic, so happy and satisfied. And then it just crumbles. It's the way the markets go. It's that thing of the markets will always humble you, but yeah, it's just typical, but it's all good. So yeah, don't worry if you're having a losing period. It's a difficult time to be a trader at the minute with the Iran situation. It's very much like the tariffs. We were talking about this yesterday again. It's not the easiest thing to do unless you're at the charts all the time. You're constantly monitoring headlines. You always know what the cause and effect is. Generally, you're going to have a bit of a rough time. And even if you do know those things, it's still not the easiest environment to trade. Can we check dollar Swiss? Yeah, we can have a look at dollar Swiss. So was it dollar CAD or dollar Swiss on the edge finder? Dollar CAD. Okay, so yeah, it's very much again what we were talking about in New Zealand Swiss in terms of it does look quite good to be a buyer, but actually on the higher time frames being short does make more sense. So I think, again, I'm not looking to do anything just yet, but if we could come back up to this 200 weekly moving average, I would actually quite happily attempt a short position. And that will just be based on the historical behavior. You know, we can see this sort of behavior we've seen on the left back in 2022 through 2025. I wouldn't mind just trying to copy the same thing where we come up to the moving average and look to take a short position. Fundamentally speaking, though, it might be a bit more difficult than that. Again, if we are expecting the higher dollar, I'm not really sure I would want to be short the dollar in that type of environment. So yeah, we'd have to just wait and see. But right now, I would say being a buyer is probably more fruitful. We've just established a bullish trend on the daily and the H4. So from a trend following perspective, that does make more sense. Tariff resistance, is it? Let's just double check. Yeah, actually, you are right. I didn't spot this. We are at a pretty strong daily level, aren't we? So, yeah, I would say, yeah, if you are bullish, then obviously you'd want to wait for the break and then maybe look to enter on a retest and then continuation. Or if you are bearish for whatever reason you may have, then just a rejection off this level and continuation lower might be the play. Again, there's nothing here for me personally, but I would say it's probably worth paying attention to for some sort of breakout or rejection. CAD Swiss, pound dollar. Yeah, we can take a look at those for sure. James, do you think now about dollar CAD shorts from your Sunday webinar? Yeah, so dollar CAD is an interesting one. It's still something that I'm a little bit unsure about. Again, just because I'm not really convinced on what the dollar is going to do yet. I think there is an argument for long and short dollar, which is why again I'm a little bit hesitant. I need to really wait for some sort of catalyst that will solidify one of the ideas, either continuations lower back into the range or a breakout above the 102 level. So from here, as Christoph said, this was a setup I was looking at the weekend, where we very clearly have, you know, the sort of emergence of a bearish trend, fib pullback, slight retracement into previous structure on the left, and then maybe some sort of continuation lower. Now the idea really was derived off the Edge Finder reading. This was more bearish at the time than it is now, so it's not really as valid. But one of the caveats, or one of the big things here, is the daily time frame. So I'm not sure if I really want to go short off this level, because if I do, I really see quite a high likelihood of this previous daily support being used as a new support. Resistance being used as support, and then a continuation higher. We are in a daily bullish trend. The RSI was slightly oversold here. So I do think the likelihood is that we come down towards 1.39. I think that's kind of sort of base case at the moment for me. But then I would really expect further upside. So I just don't really want to get in this short position here. I just don't think the risk to reward is worth it. Unless you could, you know, figure out a different way of trading it. But for the way I trade, typically I like to have a stop at the high, and then I would obviously need to take profit down here, which would give me a 1-to-1, which is fine, but it's just not really something I'm overly comfortable taking. £7, that's like 1,000 in Canadian. Yeah, maybe something like that. I think that's probably about right. I'm Irish. I drink the wine with the most alcohol in it. That's the way to go, Gareth. I like it. It's a good methodology. A trader's job is not to win, but to stick to the plan and manage risk. Every business had good and bad months. That's exactly it. Yeah, that is completely right. Not every month will be the best month you've had. Okay, right, let's move on. So what did we want to look at? We looked at dollar Swiss, CAD Swiss and pound dollar. Yeah, so it's a bit tricky with the dollar pairs right now, to be honest. Jeremy, good to see you, my friend. Hope you're well. I'm doing fantastic. Thank you very much. We've got a decent day in the UK, not too hot, not too cold, and I'm talking to you guys, so it's a good day. Yeah, so back to pound Swiss. Pound dollar. It's a little bit of a tricky one because we do have a bullish reading on the Edge Finder. So typically, you know, we'd want to be buyers. The default, easy, you know, very bullish reading. But then that leads us back into what we were talking previously about oil prices, the dollar being stronger. Oil is obviously showing strength. We've got inflation expectations that are picking up again. So is it worthwhile buying the dollar? I just don't, selling the dollar. I really don't think so, actually. I really would rather be long on the dollar at the minute, but I can't because the fundamentals don't warrant that. And this is kind of the problem really with being a fundamental trader sometimes, depending on exactly how you trade. For me, it's a case of, okay, this is what I think is going to happen. I do think that is the base case, but I'm not going to trade off that. I need to see the data reflect it and validate that idea. So I can't really do anything just yet until we see something happen. You know, I need to see something to really kick that idea and make it real, if that makes sense. So I think what I would really want to see here on the pound dollar is a clear out of these lows. I want to see a new lower low get printed and then a pullback into the fib zone, wherever that may be. Obviously, it might not be here. It could be wherever. This is just for visualization purposes. And then look for this continuation lower. I think that's, again, sort of what I want to see simplified, but I need something to warrant me actually getting into this short position. So yeah, sat on the sidelines at the moment. But yeah, we'll see how it goes. Jay, thanks, mate. No problem at all. That's what I'm here for. What's going on with gold? Not much, to be honest. Gold, I'm not really sure why gold is having the upside it's having, to be perfectly honest with you. I think it's probably just a pullback. You know, we are still in a bearish trend. Nothing has changed. The drivers and the factors for gold are still bearish, fundamentally speaking, as far as I'm concerned. So I wouldn't say this is now, you know, a re-emergence of gold's bullish strength. I do really just think this is just a pullback. You know, we've had pullbacks here, pullbacks here. I don't think it's anything special. So I would be, on a short-term basis, really looking more towards going short. I'm not going to do that, but I do think that's sort of base case, bread and butter approach at the moment. What are the settings for my fib? Very simple. So these are the settings if you do want to copy my style of fib. I only use the 50% and 61.8%. Very rarely I'll pull out the extended or the other levels. Actually, I'll never use the 78, but sometimes I use the 38. And that's in rare situations. But again, default, I use the 0.5 and the 0.618. That's the core of my strategy. I have to see pullbacks within this zone, either to the 61.8 to the 50 or within the middle of them. If we don't get that, then there normally isn't a trade for me. Texan living in Quebec. I watery whiskey down. Oh, you water the whiskey down with wine? That's definitely an interesting one. I've never heard of someone doing that. I remember when I was younger, probably 19 or 20, I went through a pretty bad breakup. It was when I first moved to London. So I had access to all of these different bars and pubs and a nightlife like I'd never seen before. And I had no idea you weren't meant to mix alcohol. Like I didn't really know that was a thing. You know, I thought alcohol was alcohol. You drink some wine, you drink some whiskey, you drink some beer. It's all the same thing, really, you know, at the core. I very quickly learned that wasn't the situation. That wasn't the case. So since then, I've made it a rule where I don't really mix alcohol. I'll have, you know, if I'm going for, you know, party vibes, I might have some beer and then maybe some spirits, like, you know, I don't know, vodka Red Bull, for example. And then maybe I'll end the night with a whiskey. And that's about it. That's as far as I'll go. And that's across the space of hours. Anyway, don't want to encourage drinking. This is I'm fairly sure this is a PG-13 stream. So we'll end that conversation there. Already long on the GBP JPY on the support you plotted. Yeah, I do like the idea, and maybe I'll enter this idea as well. I'm just hesitant, but I do, yeah. This is where being a discretional trader can be a little bit of a pain, because everything is there, but I've just got this feeling that I don't really like it, and I can't really express why, which obviously isn't a valid excuse. You know, that's not good enough as a trader. But pound yen is bullish on the edge finder. My technical strategy is there, so I think I do have to take it, because again, my whole framework is valid, so I will end up in this position. But I think it's the intervention. It's just giving me that little bit of a feeling that I don't really want to be involved. But you know, I was kind of saying the same thing back here, and this is when I missed that entry all the way here. Or was it? Yeah, I missed my entry here because I was too hesitant. And it's exactly the same thing I'm doing now. So I think realistically, I do have to get into the trade and be a man. So yeah, I will be getting this pound yen probably after the stream. We've got FOMC next week. God loves to lure people one way or the other. Yeah, FOMC will be interesting. I wouldn't expect anything overly dramatic. I think it will be cautious and neutral. That's kind of my expectation. Maybe even slightly dovish, but I wouldn't put money on that. I'd never put money on news events. That's not my style. But if I had to take a guess, I would maybe go with a slightly neutral, maybe a very slight hint of a dovish approach. But yeah, we'll see. Or actually, dovish, maybe not. The only reason I'm saying dovish is because when the markets were pricing in the hikes by the Fed, it was right off the back of the previous FOMC with Warsh. And then we started getting headlines out saying, rate hikes aren't warranted, markets are overreacting to it, so on and so on. So it might be a case of they want to calm down that narrative and take a more dovish approach. But realistically, if they go purely off data and forward-looking approaches, I think they might have to take a bit more of a hawkish stance based on obviously oil prices picking back up again. But we'll see. I'm nowhere near as smart as the guys in the FOMC, so best I can do is take a educated guess. Afternoon from South Africa. Good afternoon to South Africa from the UK. Just a joke. I don't drink much. Neither do I. I don't want to make out like I drink a lot. I by no means don't. I actually don't really enjoy drinking unless I'm going out for a reason. So you're in oil longs, short gold. Very nice. Yeah, I like the idea of being long oil. I like the idea of being short gold on short terms. So yeah, good stuff. As I said, I'm really annoyed about oil because I was in a pretty good long position here, but it just didn't work out. I'm so frustrated because the problem is it wasn't really supposed to be a long-term trade. So I entered here, and around this point here, I moved my stop to break even. All I wanted to do was just get this gap fill. So once we started approaching it, like here, I moved my stop to break even. I was like, you know what? The likelihood is we continue maybe a little bit more, and then I can get out. As soon as I moved stop to break even, it retraced, stopped me out, and then we've had this move here. So I managed it quite poorly, but it was just one of those trades that it just did not play out. It did not work out for me. But yeah, there you go. Hey, James, what's a better short on dollar Swiss or dollar yen? Dollar Swiss, 100% dollar Swiss. Dollar yen isn't worth looking at for short positions, I don't think. I think dollar yen has been a bit of a trap for retail. Even me, I was short dollar yen at 160, expecting an intervention. Didn't happen. I know a lot of other people were going short on dollar yen around these levels, and again, it just didn't happen. And it's more of a trap at the minute. It's like, oh, I'm going to place a short position because the MOF has got to intervene. Okay, yeah, well, maybe, but is that now? Is that next week? Is that next month? Is it 6 months' time? So what you don't want to do is keep shorting dollar yen, expecting an intervention, and actually we just continue heading up. And then you've taken, let's say 5 losses, and eventually they do intervene. Then you sat there like, oh, I've just taken 5 losses and I've missed the move. There is no reason to do it. I personally think if you want to get in on a potential intervention, the best thing to do is not try to catch the downside, is actually to catch the upside. So, here you theoretically could be short, great, but how would you have known to be short here? You would have had to sell at the highs. For what reason? Rather than just waiting for the daily 200 moving average and then getting long and holding it, getting positive swaps, and getting in with the overall trend. I think this is the best way. Of course, that's my personal opinion. Not financial advice, of course, ever. But yeah. And then with dollar Swiss, the reason I said 100% of dollar Swiss is because of the higher time frame downtrend. So while right now might not be the best time to go short, I think eventually we will head into a time where it is a bit more beneficial to be short on dollar Swiss than dollar yen. How old are you, James? I'm from Philippines, sending love to the team from A1, been here since 2022. Very nice, Phil. Thank you very much for the support. I am 28, believe it or not. I'm sure you do believe it. My beard is looking a bit shabby at the minute, but when I shave, there is a rare occasion I do get ID'd still, so I'm going to take that as a positive. It's a real sign of age when being asked for ID to buy, a beer or an energy drink it goes from an insult to being a compliment. I can't miss the live sessions. Very enlightening. You keep things simple and easy. I noticed gold has broken through some resistance levels on the 4 hourly, yet oil is still showing strength. Yeah. Well, I appreciate the support as well. So thank you for that. I do my best. I don't want to try and toot my own horn, but I do want to kind of explain a little bit. So the approach I take when trying to explain things is, when it's a longer term idea, like the pound, for example, when I first came on, I was talking about, you know, the debts and long term implications and things like that. It's more because they're things that I care about and I'm looking at, and I want to inform you. You might not care, some people might care, but I like to talk. And again, I'm on these streams for an hour, so I've got to talk about something. So I may as well explain those things. But when it's just short term swing trades, I think we can keep it simple, and that's the beauty of the Edge Finder. Really, is that it allows me to sit here, look at, is it bullish or bearish, then go to the charts. We don't need to go and look at all the 5 different websites and try and figure out what the fundamentals are. So it's easy to keep it simple for you. Anyway, we'll move forwards. So what did you want to talk about? Why is oil and gold different, or why they're both strong? So I think gold and oil are currently slightly driven by different things. In whole, they're obviously driven by the same thing at the moment, which is the focus on oil and inflation and the central banks. Of course, I'm not saying that's not a factor. But I think with gold specifically, what we're seeing is a little bit more of a natural pullback. So gold has been rejecting this 4,000 key level. And it's also been rejecting this daily and weekly level of support. So I think right now gold is seeing a real battle between the bears that want to see the bears that want to see gold lower based on, again, the oil prices, inflation, and central bank. Then we're also seeing the buyers stepping in, saying, well, gold has had was it a 30% drop from its peak. It's actually a good discount. We're at a nice level of support. We're at a really good key level or round number. I want to be buying gold at these discounted levels. So I think that's a little bit of a battle we're seeing within gold at the moment. But also, I think this is, again, kind of a natural pullback. We're still below the 200 moving average. We've seen these pullbacks before. It doesn't mean that gold is now bullish. It just means we're seeing a bit of a pullback. Whereas oil is purely reacting on the fact that, yes, we've got lower oil reserves globally. The Strait of Hormuz is closed. So that's the natural development for the oil price at the moment. Now, as I said, I think there might be a little bit of a pullback from this point just because this is previous support. So we've obviously come back up. We've had the break. I think we might head in for maybe a kind of a attempted pullback here. Whether it will succeed and how far, I don't know. It could just be consolidation, then we break higher. It doesn't really matter. I think the base case for oil right now is higher. I think we will see 100 to 110. I would say that's kind of my expectation right now. And I think oil will continue to move higher until we get a complete de-escalation and a 100% confirmed reopening of the Strait of Hormuz. So, yeah, swing trading happens. Better than gapping below your stop loss. Yeah. Hi, James. A bit late. How you doing? Ray Beast, good to see you, my friend. Hope you're well. I'm doing fantastic. Thank you very much. Model took a long on the Nikkei at 6,200. Interesting. We were looking at the Nikkei. Unfortunately, well, not unfortunately, but it's not seemed to have continued higher. So we were looking at the Nikkei on the daily time frame here. On the previous resistance turned support, and then the bounce again here of the 100 daily moving average. We haven't really seen much follow through. So fortunately, I didn't get into that position, but I do still maybe like it. But I just don't think the landscape right now is too conducive for it. But you got in at 6,200, which is 6,200. I'm going to assume you mean like the bottom. I'm going to assume this is just a broker difference in price. So roughly on this wick. If so, fantastic entry. Really well done. Facts on the ID part. I'm guessing you can relate to that, Tiger. Yeah, it's painful. That's how you know you're getting old. CAD Swiss. CAD Swiss, interesting. I'm not sure we covered CAD Swiss so far. Yeah, we'll take a look at that in a second. ING thinks today that USD JPY will grind towards 164, 165 area into next week. Ahead of the Bank of Japan policy meeting on 31st of July. Interesting. Okay. Yeah, I wouldn't argue that. I think that's a very sensible take. I mean, obviously, yeah, again, I'm by no means smarter than them, but I would agree with that. So CAD Swiss, I've just realized I've got about 5 minutes left, so we need to speed this up. CAD Swiss does have a bullish reading of 6. What do we have? Yeah, it's just following the typical Swiss behavior, higher time frame downtrend. Short term, we are seeing some bullish behavior. So I think realistically, the Canadian dollar might be a good buy. Again, back on the back of the higher oil prices, the Canadian dollar does benefit because it's a big part of their economy. So I don't mind this one a little bit more than things like dollar Swiss. Let's just see what the daily doing. Daily is broken above the 200. We are heading into daily resistance here. So I'm not sure really if I'd want to be a buyer just yet. I think I'd rather see these daily highs get cleared out, maybe a retest here and a continuation higher, and then look to enter, or I would look to enter on this retest. I think that's kind of all I've got for you at the moment. Again, I don't mind it. So the idea of buying right now at market price, okay. I just wouldn't really want to buy straight into this daily resistance. Yes, gold's a short-term swing. I loaded up on gold for long-term around 35% discount. Yeah, that's exactly what I'm doing. As you can see, I've got my buy orders here. 2 of them are active, the rest are pending. I'm just looking to buy it on discounts for a long-term hold. I've got no interest in short-term developments. I really don't care what it does over the next couple of weeks. It's a case of if it grinds lower, fantastic. But if not, then fine, whatever. Simo, hello. Good to see you, my friend. Hope you're doing well. Short euro dollar. Yeah, again, I'm in a little bit of a bind really with the dollar. I really like the idea of being short euro dollar. It lines up my technical approach really well. I think the landscape geopolitically speaking, again, with oil and inflation, being long the dollar makes a lot of sense. The real issue is obviously the edge finder. It just doesn't line up. The edge finder is telling us to go long. So, you know, pound dollar bullish, Australian US dollar bullish, New Zealand US dollar bullish, euro dollar was here somewhere. Euro dollar bullish was score 4. So, so it's very much a case really of I'm just pulled in both directions. Technically, I want to be short. Geopolitically, I want to be short. Fundamentally, on the edge finder, I want to be long. So I can't do anything. I need a cohesive alignment. Trump was talking today. That's why price is stagnant. Is he? I completely missed that. I need to have a look. Should I buy or sell gold? Yeah. I mean, actually, I don't think we've had a question like that today. Maybe Marco did. Unless I've missed it. But yeah, should we buy or sell gold? It's always the favorite. Always happens. Sell first, then immediately. You know what we should start doing when we get questions like that? We should all say go long gold, and we should all actually just go short and just make money off them. I think that's probably the best way. We should teach them a lesson, and even better, we could do that on meme coins, and we could really liquidate them. Of course, I'm joking. We don't do those antics around here, but it's always interesting because I would never really understand the mindset behind asking people you don't know in a random live stream whether you should buy or sell something and put your own money on the line. So it's a crazy concept. I mean, I kind of get it because if you don't know what you're doing and you want to make money, I kind of get it, but it just seems like such a risky decision to make. That's my question every day. Yeah, I know. Me too. Take the other side. Yeah, exactly. Yeah. That would be financial advice. I suppose that's true. I don't want to get sued, and I don't want to get labeled a scammer. So I think we'll leave that there. It was just a joke. It was just a joke. No one take it seriously. Anyway, we've got 2 minutes or a minute and a little bit, and then we have, I think, Alan. Let's just double check. Yeah, we've got Alan coming to take over the show in a minute or so. And I don't have a message from him today saying that I need to hold on because he's got an update. Yesterday, I made a bit of a boo-boo. I left the stream and then opened Discord and saw Alan couldn't make the stream on time. So Nick had to step in and take over for a couple of minutes. So I don't want a repeat of that. I don't want to get fired from the stream for unprofessional behavior. It's like giving money to a stranger. Yeah, exactly. That's exactly what it is. Yeah. Okay. And also, it's just a net negative for everyone. It's like if it works out, they're going to get a false sense of security. If it doesn't work out, they're going to lose money, and then they're going to hate me. So it's like I don't want to be in that position. I don't want people to hate me. So anyway, Bitcoin still really isn't doing too much, although we are seeing a little bit of a bid off this level, still around 60,000. I think Bitcoin is very much in the same boat that we were talking about with gold. I think it's a case of, I don't think there's much to support Bitcoin. And I want to clarify, as I always say, I'm not a Bitcoin trader. I don't know much about crypto. So I'm talking from a relatively uneducated point of view, and this is purely off the fundamentals. So take it with a grain of salt. But as far as I am aware, there isn't really much behind Bitcoin at the moment to support it. So I would say this is more, again, a battle that we've seen within gold of, okay, we're at 60,000, again, a really nice round number key level. We're also at a really strong level of weekly resistance. We've got buyers stepping in saying we're on a discount. It's a good level to buy. We've also got short-term sellers saying, well, actually, no, because the fundamentals don't warrant it. So we're going short. And we're seeing that little bit of a push and pull at the moment. So I wouldn't really want to get in either way at the moment. I would rather wait for Bitcoin to actually break these lows. I think that's maybe what's going to happen. But again, I don't know that much about Bitcoin, so I'm going to leave that there because I don't want to give anyone a false sense of security around it or false information. Trading Nook, waiting for your trading system to give the go ahead. Yeah. Perfect trade doesn't exist. Short euro dollar right now. Yeah, perfect trade never exists, I don't think. Other than actually the rare situations where you've got like a black swan event, then you've got a perfect trade. James, working on quantitative paper, a quantitative research paper going to publish soon. Ray, send me a message when you've made it. I'd be quite interested in having a look. James, what do you think of Aussie CAD and New Zealand CAD? I tell you what, I will leave the stream here because we've got the beautiful, handsome Alan come to take over the show. Very good guy, very good trader. So stick around. Don't go anywhere. He's coming to take over the show. Guys, stay safe. Don't get margin called. And I'll see you all tomorrow. Enjoy the rest of your days. And yeah, don't go anywhere.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. My apologies. This is my first time here rolling in the stream. And so I was also able to do the assets. So that's cool. Okay, awesome. Let me go ahead and do this here for you guys. Let me go ahead and drop that Telegram link into the chat for you guys. Definitely go ahead and join. Free value for you. Market analysis, polls, promos, everything that you may need in your trading journey right there in that Telegram channel. So go ahead and click that for me right there. Join it if you're not already in it. We would love to have you. All right, let's see what's going on here today. We are seeing a kind of everything's red there on the Forex front. You have a softer DXY, Aussie's lower, Euro's up, pound, Kiwi, dollar, yen, dollar, Swiss, dollar, CAD is down. Equity market, same thing. Let's see what's going on here today. Yields are green across the board. Gold higher. Actually breaking out here too. Oil. Uh-oh. Not good, guys. Not good. Let me look at CME Fed Watch probabilities and see what's going on that front. Have things shifted from yesterday? Let's go to probabilities here. Still the same. Okay, so we're still expecting one rate hike for 2026 and then a potential second hike up in the air for 2027. Interesting. From the news headline front, let's see if there is something else different as well. There's an alert from Saudi Arabia on their side, potential threat over there, but nonetheless, nothing going on. It's been pretty quiet in the markets, I will say. Really nothing has happened from my perspective. However, the one thing that I am watching that would trickle into other things and prompt me to make a directional call one way or the other would be the price of oil. I did say this, that, if you were to measure this move out here from low to high on this recent leg lower in oil, that this recent bump here is technically by definition, a pullback. However, we are now breaching that 61.8% retracement level, the last line of defense. And so this is no longer technically a pullback. Perhaps this is really the price of oil just elevating due to the risk of the Middle East, and the dynamics over there in the Strait of Hormuz and all of that oil trade. So we are back above 85, back into this range here. We'll see if we stick around here. But for now, my thought process is this. Likely you do get that rate hike in 2026. And likely you do see yields elevated, continue to stay sticky up there. The 10-year at 4.6 and the 2-year yield definitely up there, probably going to reach these new relative highs. If we breach above this 4.3 area, that would not be good. That would be a strong US dollar, I would say. So at this point in time, if the situation stays the way it is, then I'm looking for potential buy opportunities on DXY. I was looking at pound dollar to the long side here. This was that first level I was interested to see. We literally just fell right through it yesterday. So I'm going to see what happens here with buyers at 1.332. If the same is true, where buyers do not step in and take this higher, then my pound long idea is moved to the side. But if we go from a fib here from low to high, the 61.8% retracement level lines up right here with this. In fact, let me look at Edge Finder and see if that is still a bullish reading on the pound. Give me 1 second here. We're just going to do minors only and majors only. And I want to look for relative, just broad pound strength here. Pound dollar, very bullish. Pound Swiss, very bullish. Pound yen, very bullish. Pound Aussie and pound CAD and pound Kiwi are all neutral. And Euro pound is neutral as well. So that's one less bullish reading in the pound. So I think it was pound Aussie that was bullish as well. It's no longer bullish. So we'll see what happens there. From the US macro side of things, we have a pretty quiet week this week. Nothing too crazy into the next week. So I would imagine that the kind of like slowness of the market continues until then. Taking away the pound and looking at all of the major and minor currency pairs, what am I looking at here? Dollar CAD still bearish. Besides that, everything else is fine. Dollar yen neutral. Euro dollar is bullish. We'll see. We're seeing pound dollar bullish and euro dollar bullish. Aussie dollar is very bullish as well. However, with the idea or the potential for the probabilities of rates to start going more into hawkish territory, I would imagine that the scores start to fade off a little bit there. Let's see. Dollar Swiss is neutral. Yes, I'm gonna reserve that idea for pound dollar long. I'm gonna keep that in the backseat. I'm not gonna act on that. You're already seeing a good level here. Let's look at dollar CAD. Is it continuing the pullback? Let's see. Is this the V-shaped recovery, guys, or is this the pullback to continue lower? Let's see. 4-hour chart. Let's measure this move out here from the. Yeah, you're still within pullback territory, I would say. I'm open to buy dollar CAD. If you do get, dollar strength here, maybe you have, you're seeing this pretty obvious here with DXY, right? This was a little trend line that I drew up here. Remember, technicals are subjective, so keep that in mind. But I drew this little trend line here on the lower time frames, 4-hour, to kind of just visualize the downtrend that we're in DXY and the broader uptrend that we're in DXY. And we have since broken above this wedge. And so now you are seeing DXY above it. We're probably retesting that now. And so if you see a continuation in DXY higher, along with oil still sticky, yield still sticky, dollar CAD to me will probably be one of the better picks if you're going to play the long dollar game, in my opinion. You're already seeing a V-shaped recovery as well with dollar CAD on the 4-hour time frame. So it's just a matter of hopping into it. Maybe if you were to breach above this 1.415 area right here, this will be your buy high and sell even higher type of trade. Rev says, yeah, USD CAD looks better or looks good if we get a deeper pullback. I would say even right here, man, I think this could be a pullback, you know. What is this, a 38.2 where we got to? Not quite, shy of it. But to me, this is okay. I would just like to see more firmness in the dollar and the continuation higher. Kind of is what I'm looking for. I saw something too on Japan. So USD JPY broke out above this 160, not quite 160. Well, it's in 163 now, but this level here, if you look at the price chart of USD JPY, this was a little level of resistance that was capping some advances. We broke above it. We pulled back into it. In fact, you can see this wick here, broke above it, pulled back into it, and now we're trading higher there. So some continuation on dollar yen. And also, too, on the Japan front, where was it that I saw Japan expects to, let me just type in Japan. Let's see, where is it? No. They basically said they're not looking to hike on the next meeting. Take that away. Go to my news. Which was not good, obviously. You had some members saying that they wanted to hike 6 times or every 6 months, which was crazy. And it seems like Bank of Japan's not looking to hike rates this next month here. So could be hurtful for USD JPY. That rate differential is there, especially too if you do have the Fed looking to go ahead and hike interest rates, continuing that at least one more time in 2026. That will only widen the spread with the interest rates and then carry this thing higher. So then you add the idea of stronger dollar. War in Iran continues to stay kind of tense over there. Definitely pushes this thing higher. But we'll see. We'll see what the tolerance is for Bank of Japan. What do you guys think in the chat? We're now at 163, right? Bank of Japan was eerie at 160. We are now at 163 on USD JPY. We are 264 pips higher. What do you guys think? Is there tolerance? Do they have more tolerance for this? Are they running out of steam? What's going on there? Yeah, you also have those big tech earnings as well. Google, IBM. How's IBM doing? I know it was hurting that one day, down double digits. Still hurting. Oh, wow, look at that, guys. Nick, is that a dip to be bought? Let me know in the chat, man. Or you think there's more bleeding to be done? We'll see. Stock market has been operating on lots of great earnings, I will say. And these expectations are sky high. So if you do get some missed expectations, that could really start to unwind some things, especially too, if you have on the back of your mind or on the back of the market's mind, you do have higher rate, environment coming up. That could be a double domino effect, I would say. So we'll see. We'll see what happens there. But yeah, let me in the chat, guys. Let me know. Bank of Japan, right? USD JPY at 163 right now. As speaking, their tolerance was 160, so their line of defense was 160. If UJ gets to 160, they're intervening. They did it once, and they haven't done it again. Now that we're at 163, so do you guys think the Bank of Japan really intervenes meaningfully to bring this thing lower, or do you think that their tolerance, their floor, has moved up a little bit? Let me know. Not financial advice. So it would probably be decent to buy longer term, but would be small size. Yeah, I would say small size and open mindedness to buy even lower if the opportunity presents itself. Yeah. What's Google doing? I would love Google on any discount. Great company. Let's see if we get to that 200 day. I would like that. I'd like to see what happens there. Tesla. Tesla's all right. Okay, might sell some puts on Google. I would imagine look at the S&P, man. What a great kind of strat would be to just sell some premium, right? Get some premium on a sideways market like this, ride it out and wait for a bigger mover. When will Nick start? Let's check out, guys. Let's check it out. A1trading.com/live stream schedule. is where you would find that. In fact, I'm going to put that into the chat. That way you guys can bookmark it on your PC, on your phone, wherever. Save this link. Okay. Do me a favor and save this link. That way, whenever you look at the live stream, you know exactly what's going on. Okay. This is going to be very important for you guys. Live stream schedule we'll see right now. Right now it's myself. Nick comes right after me here. And then we have Tom. We have a new guy. Well, not new guy. Tom has been around for sure. We've seen him many, many times here. But Tom is going to be making a regular appearance, if I'm not mistaken. Trader Tom is coming up right after Trader Nick. And then myself again with Marco. And then Tiger wraps up the show. So, yeah, you can look at it up here, a1trading.com/livestream schedule. It is also in your domestic time zone as well. So you will definitely be aware of when it's happening. You won't miss nothing. Promise you. In my opinion, Bank of Japan won't be intervening as long as oil prices are elevated. Every intervention will result in just an aggressive buyback in USD JPY. So it would just end up being a waste of their dollar reserves. I love that response, right? The fundamental landscape does not support USD JPY to go lower. So if they were to, for example, like in this case here, where they intervened, boom, war in the Middle East was still on, right? And so it just re-walked back all of that and some. Now we find ourselves at 163. So I do like that idea. I like that stance of like, look, you're just going to, it's like putting a Band-Aid on a gunshot wound, right? It's not really going to do much. It's going to be the slightest temporary relief, but then eventually it's not as effective. And so I love that idea. I think also too that they are, to your point, they are waiting for the Middle East conflict to go ahead and cool down a bit, right? That way their intervention is meaningful in a way and it actually lasts. And then maybe too, you have at that point, if the war in the Middle East dies down, oil lower, not only the Bank of Japan can hike interest rates, but the US can start to lower their interest rates and other central banks can start to lower their interest rates as well. So definitely, I think that this oil chart right here is the disruptor to that for sure. Let's see. Same. Oh, Rabies is also saying some puts on Google. Awesome. One thing I'm looking at, guys, is Bitcoin. I haven't traded Bitcoin, but I like it to the downside. Okay. In the event that we do have central banks around the world looking to get aggressive and tightening rates and stuff like that, I like Bitcoin to the downside. If we tap into anywhere within this gray area, preferably right here by the 200-day moving average, the closer the better. I would like to short Bitcoin into that 50,000 mark. We've been seeing a recent bump in Bitcoin recently, so I do expect the opportunity for an entry. And that's something that I want to play. I like Bitcoin to 50K. I think that the downtrend still continues. You tapped into the 200-day moving average one time in May 11th of 2026, and you had a really good flush lower. So I'm expecting the same type of thing as well. So if we were to tap into that 200-day, I will put my stop right above that and see how far we go with that and trail stops along the way. But Bitcoin to the downside is something that I'm looking forward to if I do get the opportunity to go through with it. Let's see what else. Really slow market though, I will say. Let's talk about gold. Yeah. Gold is a little bit resilient here despite the elevated prices in oil. What do you guys think? I am actually looking to, since we have the technicals kind of lining up here, I'm looking for a speculation play of buying some gold here on this breakout. I think it'd be wise. I think you have good risk, risk-defined opportunity where you have your stop below here in case the Middle East stuff does continue to flare up and it doesn't progress and yields take over and the dollar pushes higher and gold pushes lower on that. I think this is a good attempt for me personally here. Probably will target 4,400 or the 200-day moving average, see what happens there. If we do overcome the 200-day moving average, then I would continue trailing higher. But yeah, I like that idea. The only kind of headwind that we're experiencing from the market for gold, I would say, is the Middle East, right? You had lower inflation in the US. You had the jobs data recently not looking good as far as NFP. So you have those things going for it. But then you have that overwhelming blanket of the Middle East stuff that are just contradicting all of that. And that is a blanket that could easily be lifted off. I would say, well, not easily, but it could be lifted off if the perfect conditions are there. So I think that in the event that the Middle East blanket is taken off, then those other underlying fundamentals like that cooler inflation and the job market data starts to shine again. And then that would allow gold to go ahead and bump up. So this would be purely a speculation play that the Middle East stuff cools down and it allows the underlying fundamentals to shine through and push gold higher. And the only reason why I say that now is because we are getting a technical break. So before we were still under pressure below this technical bearish trend line here. So I couldn't make that call. I couldn't see it technically the breakout. But in gold here, I think this is a good attempt at a long opportunity here. My personal opinion. Good day. In your opinion, how would China's stance on gold impact the market? Well, China, not only China, but other central banks around the world have been, continuously buying gold, right? I don't think that it really has such an implication that it would really make a directional push in or a directional push to the upside in gold. I think it's just consistent demand, but I wouldn't overvalue or overweigh that single variable. I think right now the big thing to watch, Simone, would be yields and the price of oil to really give you a sense as to how gold strength or weakness could be, if that makes sense for you. So let me give you this example here, okay? Gold yields nothing, okay? It's a non-yielding asset. And usually in times of war, it is a safe haven. Well, in this case particularly, the dollar is also a safe haven, but the dollar also provides you a yield, right? So you could think of gold and the US dollar as technically safe havens, right? Risk-free bets. And so if you had the opportunity to, in the time of war like this, flee to a safe haven, would you rather flee to one that gives you no yield or to one that gives you a yield? Okay. And so you can look at the yield by just looking at the 10-year yield, for example. You can see that the 10-year bond note in the US was paying around 3.9%, 3.95% before the war started. And now it is up to 4.638%. And so you can secure a 10-year bond note and get that 4.6% risk free, essentially. And so money is flowing into that higher yielding bet as the war goes on, right? And the higher the oil prices go, the higher the yields go. So it just gets increasingly better. And so that's why you're seeing that outflow of gold into the US dollar. Now, in the event that the war starts to cool off and you get oil lower and yields lower, well, then the rate that you would get for holding US bonds goes down. And so that just increases the potential appetite to go from US debt to gold. In war, people sell gold to secure resources. I would say in a lot of environments, like people just want liquidity. For example, if you were to get a sell off in everything, if correlations go to zero, then you would just see a bunch of cash because people are just trying to liquidate and hold cash. But yeah, Simo, I hope you appreciated or I hope you understood that well. I hope it landed well. And for everyone else too on the audience that is watching, that is essentially the dynamic that is happening with gold. It was tricky though at first. A lot of people were confused. I remember social media when the war barely started. They said buy gold on the open as soon as the war in the Middle East started kicking off. And this is at open right here. This is the candle. March 2nd, which is that Monday because the war started on the weekend. That March 2nd candle was literally the top. You had a slight wick higher, but from there on out, it was literally a decline from there. And a lot of people got stuck in that trade. I would imagine a lot of people got stuck. They said the easy trade was to just buy gold on the open, full port it, do whatever. And that ended up not being the case. DXY go to 100.5. Listen, if I'm looking for a softer gold, I want DXY to go to 100.5 too, brother. Believe me. We'll see though. We're kind of in the middle of this range here. We have some technical breakout here to the upside. We'll see what happens. But if I'm being honest with myself, as long as you see this chart up or this chart up here, same thing, oil higher and yields higher, DXY probably doesn't go down much, to be honest. Crude oil, please. Crude oil, I would say, is problematic if we start trading back up into this range here, which we're seeing that today. But we'll see how the close goes, and then we'll see how the day progresses. But with oil, problematic if you are back up into here. In fact, well, I'm going to do this for now. I'm going to turn this into green to highlight that this is support since we are now within the range here. If oil stays here, then that increases inflation concerns. That likely walks back the inflation progress that we saw in the US recently with CPI and PPI, right? So we had lower prices in June, and that translated into lower inflation prints. And so if you have higher oil, that'll obviously walk that back and pick up those inflation prints, and perhaps they get back to where they were before or higher. You never know. So this is a problematic kind of chart here. This chart will answer a lot of questions. What's your take on gold? If you just want to go back maybe 2 or 3 minutes, Lisa, I literally went through the whole spiel. So just go back 2 or 3 minutes and then come back to this, and I'll give you my full breakdown of gold. Silver, let's look at silver here. Still within this wedge. I don't like silver though, guys. You guys know my stance on that. I think it's done. I think it has a lot to overcome. And if you had to pick one of gold or silver, I would pick gold all day. I think silver has a lot of pressure ahead of itself, but we'll see. You never know. History doesn't repeat exactly, but it rhymes. I think it's rhyming right now pretty well, but again, something could change. But usually when you have these big spikes up above, you have some big corrections and then a quiet period thereafter. You had that in the 80s, 2011, and now you're seeing that similar kind of scenario play out now with silver. So I kind of don't like silver. I would prefer not to trade silver. Let's see what else we got here. Dollar CAD. Push lower, man. Come on, dollar CAD. I would love to buy some. Kiwi dollar. Kiwi dollar to the downside, I would really like to take too, if you do get stronger dollar in play. In fact, this is kind of what I would look at. Short opportunity, Kiwi dollar, you are at the 200-day moving average right here and within this level of resistance. So it is literally my definition of a perfect entry. You just got to wait for the right stars to align there. And then I would put my stop right above structure here. And that would target this recent low. And then beyond that, depending on how I react to here. That is my Kiwi dollar short idea. Only if you have oil continuing to rise higher, yields continue to rise higher, and the dollar continue to firm up. That is what I would need for Kiwi dollar. Let's look at global yields here. Oops, wrong tab. US creeping up, Kiwi creeping down, which I like to see that divergence there between the two. That'll even give me more conviction in the trade. So US O2 yield trading higher, and the New Zealand 2-year yield trading lower. I love to see that. Canada and Europe are creeping up higher as well. Pound is up there. Aussie's creeping lower. Are you giving away prop firm accounts? You know what, Cab? I'll do this for you. This is for you, Cab. For prop firm giveaways, go ahead and join this Telegram link right there if you're not in it. And every so often that we have giveaways there. There was a giveaway for World Cup tickets. So they have that. They have prop firm giveaways as well. So join that, and maybe you'll see something in there. Maybe you'll see something in there. But we have lots of free value in there all the time, every single day. So there you go. There goes Nick. More giveaways here as well. A1trading.com/giveaways. You'll see them in the Discord as well. So just get involved. Get involved. Join the Discord. Join the Telegram. Bookmark that link as well for the giveaways, and you'll get something out of it for sure. And also, too, here I'm going to drop the link for the Discord as well. If you're not in it, it's a free Discord. You can also chat with other traders in a free chat that we have. It gets active there sometimes. So if you guys want to just talk about trading, talk about markets, trade setups, all that, we definitely encourage it. Go ahead and join the Discord as well. How do we get these 2-year yields in one chart? I'll show you. So I'm going to show you with this example here. So let me go back to this tab. So this is the USO2 yield, right? So you just type in this chat, in this right here, USO2, USO2 yield, and you put the chart up, right? What I do is I change it from a candlestick chart to a line chart. So it's in blue here. And then you can just change the color by double tapping this and going from blue. You can do yellow, you can do orange. We'll do orange for the purposes of this. And then right over here next to the 002 yield, you can see compare symbols. Click that little plus, and then you would type in the other one. So I already have them here because I look at them often. But if you're looking at, for example, New Zealand, you would just put NZ02Y, and then you would put it in at the same scale. And then there you see New Zealand O2 yield. Then you go over here. Let's say you want to add the the pound GB O2Y. Same scale again. And there you have it. And then you can just reset chart view. And now I have these trend lines here, so ignore that. But that's how you can add multiple yields. You can do that with the 2-year, the 10-year, whatever you want to do. But that's how I do it. And it's very helpful. Bro, gold just break out. It did. It did. I'm liking gold. I think I'm going to take that opportunity. This is a great question, and this is what's happening right now. So if yields are up, gold is breaking above, but the ceasefire is in the air. What could that possibly mean for gold breaking to the upside? That could possibly be that the market is front running the possibility of a ceasefire on the horizon. So they're pricing in that expectation of maybe there's a ceasefire close by. Now there's a trade-off to that. So by front running that idea, if your expectations are dismissed, then you have repricing to be done, and so that would shoot gold lower pretty aggressively, I would say. So that's the trade-off, right? There's a bet here to be made that the war would end relatively soon, and so maybe we're seeing some of that front running. However, with those expectations, you have to accept the trade-off that in the event that things start to escalate even further, more than what we've seen in the past, the repricing would be quite aggressive. When is Nick joining? Well, let me just call him up real quick and tell him to join. I'm going to snap my finger and I'm going to make him come back. Okay. Just for you, man. Let's go ahead and do that here. We're going to roll that. I'm going to snap my finger and I'm going to get out of here.
Don't go anywhere, traders. The show will be right back with our next show host. But before we get back to the show, I wanted to mention today's live stream sponsor, Ola Prime. Ola Prime is one of the fastest growing prop firms that I've seen in the space, and they offer a super wide range of different account types. Whether you trade Forex or futures, whether you're a swing trader or you're a day trader, they have multiple different account types, and they have some of the most competitive pricing that I've seen in the industry. And check out this publication from Deloitte, who did an audit during a select period of time on Ola Prime and its payout legitimacy. One of the big things that Ola Prime is well known for is their very fast payouts. They have this posted up all over their website as one of their main reasons that traders like them. From what we've seen, they also have a very strong reputation overall within the trading space, and they are a proud sponsor of our everyday trading stream here. And for a limited time, if you use our promo code that you can see on the screen right now, A1 Trading, you can get 20% off any of their accounts. And using our discount code lowers the barrier to entry, meaning that your challenge costs you less and gets you that much closer to potentially getting a payout someday. Of course, to throw my 2 cents in there, I'm a big fan of not trying to get funded until you feel you are actually ready to do so. So if you feel you have the skills, if you feel that your trading is up to par, and you do your due diligence on Ola Prime to see if it's right for you, then make sure use our promo code to get that extra discount at checkout, and we'll be dropping the link to them down below in the live stream chat. You can also find it in the description, and we'll have a QR code on the screen right now that you can scan if that's easier for you as well. So thank you to Ola Prime for sponsoring today's live stream. Now back to the next show. All right, shout out Ola Prime, and we are back with the dynamic duo here. Hey Chris, how you doing, man?
What's up, dude? Good morning.
So a little bit of volatility coming back in. Nas is down 0.8%, S&P down 0.25%, and gold is finally, I saw somebody comment this, Chris. Somebody said, is gold finally like realizing that it's a risk or a safe haven asset? Like, I think it woke up and it's like, wake me up when September ends. Like, they sing that song. Like,
Yeah. I mean, it's nice to see a little bit of a bid off these like choppy lows around 4,000. I still don't know if this is like the bottom. But what's going to be interesting is if we fail, let's say that gold fails around like 4,300. I think my screen's share. Yeah. Maybe around 4,300 or so. If we come right back up into this cluster moving averages and then we go back down, then it's still just an out of favor gold trade right now, which I'm okay with. We would talk about this for weeks now. It's like accumulation is the name of the game for me. But I do wonder if we see gold surge up to like 4,500 or so. I think that's possibly like a structure change. I think this will maybe return in like, okay, this like uncertainty in geopolitical space, this uncertainty here. I think gold just catches a pretty steady bid at some point. It's down. I think we had peak trough about 30%.
yeah,
Pulled back like 29.5%. So is that enough? Is that enough to be like, okay, it's time to buy it and stay on the buying train, and then we'll see what happens. But no, it's been beat up. It's been oversold. You can look a lot of technicals on gold and silver and see that it's probably prime for at least a pullback into, I'd say about 4,250 to 4,300 in the near term. And so for scalpers, like that's a pretty good window to play. You still have some more upside there if you're looking short term. Just protect the profits and make sure you just be quick. Just take your stabs. That's all.
Yeah, I think that's fair because let's still respect all your moving averages that you've got on the screen there.
Yep.
The drastic structural change that is 2026, which is the Fed is possibly going to hike rates. That's up for debate. But the point is, the debate is whether or not we're hiking rates, whereas before it was that we're going to get 3 or 4 rate cuts in 2026, right? So that makes sense. People ask like, this makes no sense. Why is gold down so much this year? It actually makes a lot of sense. You had 3 years of nonstop upside move, and here it is. It's kind of it's coming back to reality a little bit. And I think if you just kind of wind back, this is still a clean chart. This thing still looks great. It looks like it's, if you've been in gold for 4 or 5 years, good chance you're still very happy with your returns, even after the 30% peak to trough drop. Obviously, you liked it better here, but still, people who have been sitting in gold have been rewarded for that patience. And, I to answer your question, is it time to kind of start loading up on some gold? Of course, not financial advice, but for me personally, the idea of dollar cost averaging, building a position is something I'm comfortable doing and have started doing. I told you this, Chris. I've been selling cash secured puts on GDX. It's trading the gold miners, which is, I prefer the metal, but I also like the high implied volatility. I was getting some good premiums on the GDX side of things. So I'm willing to kind of play that and build a position if needed. I also think that the gold miners, they could stand to benefit from a continued rise in gold prices. And if truflation is kind of signaling that prices are coming down, they benefit dually from lower input costs on the other side of things. What's not so positive though, specific to your gold miners, is the rise in oil price, right? Of course, they're very sensitive to input costs, as I just mentioned. And that is where it gives me a little bit of pause. If oil rips to, $100 a barrel again, does that kind of squash the gold rally? I would say possibly does, because that's going to just spook the rate hike story. Would you agree? Like, does that, let's say you get oil and gold continue to move higher. My bet would be that short term, I think that probably cracks gold before it cracks oil. What do you think?
Well, I think that, oil going up. Gold's been beat up enough that I think gold has room to recover, even in the face of higher oil, at least in the near term. I think either one of those heading higher, especially oil right now, it's probably the equities that's going to feel the most pain, I think, in the near term.
Yeah.
So that's probably the most vulnerable. We've taken this, look, semiconductors had a nice, 2 or 3 day recovery after this was down 20.5% on SMH, which is heavily weighted with NVIDIA, XOX. which is also heavily weighted in NVIDIA. I mean, there's NVIDIA. It's not the same chart, but I mean, NVIDIA down, SMH down, SOXX, same thing. I mean, a lot of these charts, it's scary how correlated a lot of these charts look. Take this compared to SK Hynix, and you'll see a very similar. Well, that's ours. Is not the data one. Hang on a second. SK Hynix. This should be the one that has more data to it. Yep. Looks exactly the same as SMH, SOXX, XOXL. Anyway, I just part of me wonders, like, should I just be like doing maybe some weekly like broken wing butterflies and see if this thing catches a bid? Am I playing with fire? But I mean, at least broken wing is risk defined. I mean, we're back down a couple of dollars this morning, lows around 48. I mean, I'm tempted to maybe put on like a near-term ratio spread and see, like, if we don't take out this low and we just stay bid through. And like right now, Nick, my timing is probably end of the month. I mean, if the market's going to finish July, which is historically bullish, and just try to catch a bid into the end of the month, semi could be up. Equities try to push up to that 76.20 mark on SPX. I'm just looking to see, like, does the market have some fight in it to get back to those highs, or try to attempt to get to like 75.80 again before the end of the month and finish positive? Because we're barely getting a green candle for the month. It's like a sliver of green right now after yesterday's move. So tiny little green candle.
Chris, we've got a obviously a big report today, or two big ones. We've got Tesla and Google after the bell. I've got my little radar here I wanted to play around with. So we've got Google, Tesla. For the gold people, Newmont Gold is also reporting. If you care, not a lot of people do, but I do. IBM, which notably, usually I wouldn't care too much about IBM, but because it's dropped 30% or 25% or whatever, earnings will be interesting to see if that gets any kind of volatility. Google, the last few times, hasn't moved tremendously. Last time, I think it was up like 8 or 9%. So there was a little bit of move there. But the one-day average return, 1 day later, I should say, 3.3%, which is, of course, this is only looking at a couple unique recent examples to build this average. But the point is, last few earnings have not been wildly exciting for Google or for Tesla for that matter. Tesla is also, of course, just a quick look at the stocks. Tesla's been in a range. We've been kind of doing nothing for a long time on Tesla. There's been a lot of swings back and forth, but not a lot of follow through. Now, if you are not a stock trader, don't worry. This still matters to the index at a big level, because think about this. Google, Tesla, these are big companies within the index, and they matter a lot. So when you're looking at Google today, if Google drops 10% or if Google rips 10%, that's going to move the whole index because of how big it is within. Chris, any thoughts here? I like Google. I'll say just Google is my favorite stock. It has been for a long time. I would like to get some Google. So what I might choose to do is I may sell kind of a ridiculously out of the money put just to catch something. And if it hits, I'd be like, heck yes. And if it doesn't, I'll be like, all right, I'll put something in my pocket and move on. Probably not going to do anything with Tesla personally. What about you?
I'm trading both of them right now with some call calendar spreads, which basically the trade itself looks something like this. So this is Tesla. This is what it would look like Thursday morning coming into the market. So a calendar spread allows me to essentially just get volatility crush, which means the market's anticipating this high news event, right? So it's going to be a big mover. If the markets don't really move immediately, or don't move like way outside the expected move, then that immediate volatility crush pays pretty quickly. So my trade is in for like a small debit of 78 cents. So, I mean, it's basically $78 per contract risk. So I got a few $100 in there. If we get to Thursday morning and we're hanging out here, like, let's say, we're above 370 and we're below 390, I'm probably going to turn that, 78 cents into 150 to 200% gain, which is not bad. And it could get even better if I wait until Friday. So I don't know if I'm going to wait that long, because these stocks are volatile and there's that immediate follow through. Like with the Monday, Wednesday, Friday expirations, they have that like single day surges that can come in pretty quickly versus just going week to week. So if I see a good profit on Thursday morning, I'm probably going to protect it, or at least take out one of the contracts and try to play with house money for the rest of it and see if I can get maybe this is like a 9-to-1 opportunity if I'm like spot on by Friday, but that's tough to get. I love the love the 2-to-1s, love the 3-to-1s, but yeah, I'll see what happens. So that's how I'm playing it, because it's cost effective. I'm not trying to chase direction. I look at the bigger picture. Like, I did put on a trade here. I'm willing to own some Google and just repair it. Like, if we bounce off the 200-day moving average, I probably will look at a near term put and see if it'll just bounce. Something like that. So I don't know if it looks good. Let me see if I can go to Google right now. So Google trade. So through earn, let's just go to the end of the month, dude. Let's go out to end of the month. Says plus minus almost 23 points. We're trading at 347. I like the 320 area just because that's a nice strong bounce. So let's see what that looks like from a price. Let's go 325 by 320. This isn't a bad trade. I think I may take this morning, dude. So 325 by 320. That gives me a little bit of buffer. I might give myself a slightly larger, probably this one here. This is $7.50 of a profit trap. The expected move is about 23 points. We're trading at 347. Google's average earnings move is about 7.15%. So let me find out what that exact number is. So 0.0715. And we're trading at 347. So, I mean, it's priced pretty close. I mean, 24.8 is the average earnings expected move, and the broker shows about 23 points. So sometimes the broker is priced over, sometimes the broker priced under, but we're expecting maybe about a 25-point move. So I think, and that 750 profit trap, I think that's why I'd like a trade like this, is that profit trap would actually bring my break-even price down to 312.50.
Okay. Yeah.
So I think that helps me stay out of the way. I think I'm going to take this trade, dude.
I like that. Yeah. No, I like the Google plays as well. I'll give you my elevator pitch here on Google. So I like that you are coming into a support level. Moving average wise, I like the 200. I saw you had it there too. 200-day moving average, that puts you down around 320 or so. And the other thing is, I like it if it were to give that little bit of a juke to the downside type of thing. The PE ratios, I do look at this stuff. I like to know kind of the general valuation of what I'm owning. And the Mag 7 doesn't look outrageously expensive, which I think is a very interesting kind of thing around this time. Like, in the .com era, everyone pointed to how a lot of these names were going like 100 PE ratios, and we're just not there. Like, you look at the forward PE 24, trailing 12 month 27. I wouldn't mind if Google drops 10%, these numbers are going to come in real nicely with those 3-year averages for those numbers. And I like that a lot. So I like to look at, from a stock box perspective, we look at like the 3-year average of some of these key metrics as a gauge for over or undervalued. It's just kind of a valuation screen that I've built here. I also obviously like the consistency to these businesses. They are still cash cows. Yes. And there's this worry like, oh, they're going to eat into their free cash flow and all this stuff. I agree, that is a worry, but it's an optional one that can be scaled back at any time. These companies also just mint money. So if they need to pull levers, if they needed to make money, if they needed to put more free cash flow in their pockets, they could. Right. So I look at these things and I'm like, okay, these are the best in the business. Google, like I said earlier, is my favorite stock longer term. And so, it has been for years. And so if we get the dip on Google, I'm almost always a buyer. They have YouTube. We use Google tremendously for all of our stuff. And I just love everything they do. So anyways, yeah, 320, I'm more than happy to, as you put it, repair the trade. For me, that would just be, scale into a position. I may just sell, the cash secured put around 320. If I get assigned, I'd be happy, and then maybe I could buy some more 300, 280, 260, and I wouldn't mind building that position and letting sit in the portfolio. So there's not a ton of companies that I feel comfortable doing that with, but Google is a conglomerate. It's almost like an S&P 500 by itself. Same with the other Mag 7s. These things are so spread out. There are many, many businesses within one. So yeah, so Google is top of mind today. Tesla for me, Chris, I did really, really well in Tesla back in 2020. I had another really good run in 2025. But this one for me is just the fundamentals are hard to defend. It's so tied up to Elon Musk. Long term, it's not my favorite anymore. At one point it was, but for me, not so much. And, I think I'll watch it. You know, there might be some from an options trader perspective, there might be some nice implied volatility, you know, with the vol crush kind of stuff.
Yeah.
But for me, I'm not super willing to just, you know, deploy a bunch of capital and sit in Tesla shares personally. Again, just personal preference. I think there's better stuff out there that I like better.
Yeah, the premiums aren't nearly as rich as they used to be, but I still have a lot of positions in Tesla around like the low 200s.
Okay.
So, and most likely that's just like good for time decay and getting paid on just, you know, every 30 days that pass, it just, you know, puts a little bit more money in my pocket.
Yeah.
I do wonder if the next big leap for Tesla is, one, we have to have some type of merger with SpaceX and maybe it's just one giant company, or two, we have to have some innovations like they start deploying humanoids that are, you know, taken by the market. And it's not just Tesla. It's, you know, this has always been the argument as an investor. Is it more than a car company? I think, yes, it's been treated more than a car company for all these years.
Right.
And then people argue, well, if it is a car company, it's a terrible car company because they're missing on deliveries and their cars are blah, blah, blah. I just got a Tesla last week and
did you?
I kind of like it. You know, it's
nice.
I
mean, they're really awesome.
They're nice, and they're getting better. Like the 2026s, you can order like the Model Y that comes out like October, November. They did what I think everyone's wanting. You want to see better suspension, quieter cars. You want to see better tech. You have the option for the full self-driving, and they put in like, you know, you can fit 6 or 7 people with the configuration of longer wheelbase. So they're making them longer, higher, you know, higher ceiling, more room. And it's like, they're just listening. I feel like it's one of the few car companies where every model is like something for whoever wants it. You know, it's like, dude, I don't even want to go down this rabbit hole. I've been shopping way too many cars the last like 3-4 weeks, and it's driving me crazy because I've been indecisive. It's driving my fiance crazy.
Well, and now it's driving you, Chris. Now it's driving you.
Yeah. Yeah, the full self-driving you get it for a year included, and then you got to pay, you know, $100 a month, and it's really good. I mean, I've been in the full self-driving cars, and it's impressive. I still know how much I trust it on, like, you know, if you're on like an 8-lane highway that there's accidents every single day, I'm like, I mean, I know it's good, but I also don't need to be lazy and take my eye off the other road.
Sure.
So anyway, it is what it is. But my point is, it's more than a car company, but I think that's maybe the next leap to the stock is we have to see something like, oh, Tesla is doing this with energy, doing this with chips, doing this with fabricators, doing this with humanoids. And then it gets treated like that you know, innovative company that it's been rewarded for so well.
For me, Chris, I've had like tremendous, in terms of an individual stock, I think I've bragged about this to you like a bunch of times, but individual stock level, that's been the best stock for me ever. The 2 different times that I traded it, they were both like massive contrarian, like, I felt like, okay, I wanted to buy some stocks and just kind of like buy the dip on the overall index, but instead I put some in Tesla. And those were the two, like, it wasn't because like, oh, I love Tesla. And I do still think the technologies are incredible. Like I also am, you know, kind of a fan of Elon Musk, not the political side, but like he's CEO, he's a beast.
Sure.
So like, and you know, I think like going to Mars, like that's a sick mission. So I get that side of it. But like from a contrarian in terms of like market sentiment, I love that stock for that purpose, because it gets absolutely trashed when people, you know, when sentiment goes out the window. Tesla, you know, down 50%. I really like looking at the stock and just kind of like building a position in it, because when, or I should say, if that sentiment bounces back, which has been the story, you know, V-shaped recoveries have been, you know, and that's the thing, V-shaped recoveries have been so reliable. I mean, obviously that makes me nervous because it's like famous last words. Everyone gets used to it being so reliable. But like at the same time, if I'm being a trend follower, I'm saying every time we get a very sharp move, giving the market the benefit of the doubt has been so successful. I still don't think you want to leverage up and be crazy, but like I'll say it again, we've been talking about this. If you get a sharp drop off again with the Iran stuff, I'm going to buy the dip. Like I'm going to buy creatively. I'm not going to go all in on a particular, you know, high leverage bet or anything, but I'd buy that dip because historically, and that's all we can do as traders. We can look and say, like, historically speaking, generally these dips, more often than not, you are rewarded for stepping in and buying the dip. Of course, that will change at some point. Of course, it's not a certainty. That's why we don't use leverage. We don't, you know, get stupid with it. But an educated guess of like, okay, if I liked some names here, I might as well buy them here and give it a shot with a defined risk type of approach. Or in your case, you know, you're kind of willing to play the premium game as well. And so, yeah, I think, as we look at the Nasdaq pulling back here, you highlighted the DRAM ETF. I'm looking at semiconductors. It's like, it's real easy to get caught up in this stuff and chase it when it's at its high point.
Right.
But then I think that the risk reward starts to look really good at like, okay, these things have been hit hard. They're kind of deleveraging. They might have another good flush or two in them. But then the risk reward on some of this stuff, in my opinion, with defined risk, stop losses in place, looks good for a possible rebound trade.
I think that I mean, we've heard the acronym TINA. There is no alternative. I think right now it's like for the foreseeable future, unless something really, really, really breaks, I think this market's going to try everything it can to go up. And it may be like the slow grind. We might be in the later innings of our. I mean, dude, we've been in a bull market for 17 years.
Yeah.
So I mean, if you're pushing 19 and 20 years, that's historically as long as bull markets have really lasted. So it does make me very skeptical of how long this can continue outside of maybe we get into 2028, 2029. We're a century into the Great Depression, anniversary. It's like, I don't know if that's something ominous or black swanny that looks out in the future, but I could see from like right now, 2026, I might summarize this as we continue this behavior. I summarize 2026 as like the Great Rotation, because like we've digested an ongoing conflict in the Middle East. We had a 10% correction. We had a 5% correction. We might have another 5% correction. We might grind a little bit higher, have another 5 or 10% correction. But yet at the end of it, we still just are like steadily grinding higher, or all those dips, like you said, get bought. As we clear this crap up and we get more clarity out of the Fed and get more clarity on inflation and the stuff in the Middle East, that clarity might also be a driving factor and a tailwind for the markets to still go higher.
Yeah.
So I think we just have to navigate this stuff. And this is why right now it's like, I'm just not taking a lot of risk. But if you're giving me a bias, it's like, I'm probably 65%. Like, I think this market's going to go higher.
Yeah.
So that's my edge. And so the way I'm trading that is I'm trading it conservatively. I'm out of the money. Every time the VIX flares up, I'm selling more premium. You see that in my alerts all the time. It's like, I'm doing like, I took a trade on Meta yesterday. I'll put a couple, if I take that Google trade, I'll post that one as well.
Okay.
But I'm just going out of the money, selling some premium. I mentioned Tesla, like, it's time that's making me money. I'm making like $400 a day in Tesla, just sitting in it. And my strikes are down to like the low 200. So, could it cause me some volatility grief? Sure. But we'd have to come down to like 220 or 230 or 215 or 200. And I'm not saying that Tesla won't do that, but it's, according to the option chain right now at this part of the year, it's harder to do that than it was, in March when the VIX was up to 30 consistently. And, Ivy rank on like every stock was up into the, 50s and 60s.
Yep. There you go.
So,
Chris, I've got 2 plugs for everybody. You just mentioned your Pulver Alert service. I just wanted to, for anyone who is interested, if you want to trade with Chris and I, we have a Discord where myself, Marco, who you may know from the streams as well, Ivan, we're all sharing our trades. We've got an open chat room as well. If you're interested in getting some more information or interested in getting access to Edge Finder, you can bundle the 2, for example. All of it is currently 45% off. We're doing our summer sale right now. And if you're interested in that, I just dropped that link in the live stream chat. Just hit that link. It'll connect you to a person on our team and they can set you up with that discount. Chris, I'm going to let you out just a minute early because I got to show one other thing. I don't want to hang tight with you. So thanks for coming on, man. And we will see you on the next one.
Sounds good, man. See ya.
See ya. Okay, guys, one other thing I wanted to share here is that we do have coming up this afternoon, we're going to be doing, I mentioned it yesterday, we've got Prop Shop Trader doing a really cool webinar event with us. It is completely free to attend. The Prop Shop Trader CEO and myself are going to be going on a webinar. We're going to be discussing what I think is one of the best up and coming stock prop firms as well as futures. So they offer, for people who are interested in stocks, like I don't see a lot of prop firms out there that offer equities, but they've got a really cool and very scalable program for futures and stock traders. This link right here, this is the, let me see if I made sure I do this link right. Let me sure that link is clickable here. Hold on, I'm going to drop it separately. I don't think that worked. There we go. Okay. Is that good? Link should be there. Anyways, just drop that link. if you're interested in joining us for that webinar event, it is going to be a lot of fun. We're going to be talking about all sorts of different ways to scale up with Prop Shop Trader. If you're a futures trader, if you trade gold, if you trade Nasdaq, ES, YM, whatever, if you trade equities, they have a ton of flexibility in their programs. And the reason that I thought it was a good fit for my audience specifically is because they're really swing trader friendly. So if you're somebody who is a swing trader, they have accounts that are actually set up for that. We're going to be going over that, and they're going to be doing some giveaways as well as some huge discounts for my viewers. So join us on that webinar. You won't regret it. It should be a lot of fun. So the registration link is in the chat right now. And up next, we're going to be welcoming back, guys, somebody who has not been here for a little while and is making the great return. It is Mr. Trader Tom, who is from Simply Forex. He's going to be doing some technical analysis setups. So one thing you guys will like if you're a Forex person, Tom is a lot heavier on the Forex side of things, which will be great because we'll go over, I'm sure he'll be doing things like euro dollar and pound dollar, etc. So don't go anywhere. We're going to play a quick break. And then up next, we have Trader Tom taking over the stream for a session. I'm excited for you guys to see him, and I'm excited for his wonderful British accent. Stay tuned. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good afternoon, traders. How are we? Hope you're all well. Good to be back. Hello, everyone at A1 Trading and Trader Nick. Hope you're all well, guys. Those who don't know me, I'm Trader Tom from Simply Forex, and I am a technical trader, and my focus is Forex, guys. Also a currency analyst at investing.com. So I'm going to look at a couple of trades that I'm currently in right now. I'm going to share those with you. And then we're also going to look at some New Zealand dollar levels. We're going to look at yen intervention because that is rife at the moment. And it's at such a intervention level. And we're also going to take a look at the US dollar. All right, but let's start with a couple of trades that I am looking at. Let's start with Swiss franc, Japanese yen. Also, guys, if you want me to analyze any currency pairs that you're looking that you want to look at, please let me know and we can take a look at them. So leave a comment in the live chat. Right, Swiss franc yen is a trade that I am currently in, and the reasons for that are as follows. So the daily, guys, is my direction. And as you can see, I'm just going to follow structure and keep things simple here, right? So as you can see, we are in a downtrend, all right? We haven't broke these highs and we're getting lower lows. We even break that, that breakout wick that we see here. And then at this level, you can see that sellers have taken over, right? We've got bearish candle, top wick, bearish candle, top wick. All right, and we've got all of this free air to potentially move into. So daily is telling me I can sell Swiss franc Japanese yen. Actually, guys, what I might do here quickly is this. There you go, full screen, kapow. Swiss franc yen's telling me on the daily I can sell it, and then I'm dropping down to the lower time frames to understand where I can sell it. And as you can see, guys, I'm also looking for H4 structure, right? So you can see we was in this kind of ranging market, and then we eventually got a break and we started to see lower lows. We had a pullback to our smart river, and then we started seeing sellers come into the market, right? We got this big bearish H4 candle. And that was the catalyst for the entry, guys. I got a slight pullback, stops above the high of the candle, and I'm going to take profit back down at this level. And then I'll take partial profits and then let some profit run should the trade work out. Now, we definitely had some yen intervention earlier. If we drop down to the H1, I mean, this was the candle. Okay, and you know, we've been seeing that a lot with yen. It's just yen is so weak and they want to intervene. And if we take a look at US dollar Japanese yen now, and we go to the weekly chart, right, that last high here hadn't been broke. You know, previous highs to that were from 1986 or something mental like that, right? So you can see we are pushing past that level, right? We had some wick rejection, but now we're pushing past this level. If the BOJ are going to intervene, it's going to be in here, right? They've tried to intervene here. You know, will they continue this intervention? Potentially we could end up with some weekly wick rejections up here. And for my Swiss franc yen trade, that's what I want to see, but that is not the catalyst for my trade, right? Mine is a purely technical trade. So Swiss franc yens, guys, that is the trade I am in. And also very recently, I just got into Euro US dollar sells. Okay. Now with Euro US dollar, we'll also take a look at the dollar index because it's all about the 100 level, right? And we'll take a look at that very shortly. Now with Euro US dollar, we were thinking, is it building up? Are we going to see? But then it basically broke down, right? We broke these lows in here. We're not making higher highs. This level is holding. In fact, we could put a resistance level through here, right? That's holding. And then again, ever since we've hit that level, sellers have taken control. And all I'm looking to do is potentially take price back down to these lows here, right? So this is again is a live trade. If we drop down to the H4, you can see, again, it's just multiple confluence, guys, is all I'm looking for, right? Well, it's not rocket science, right? Daily's in a downtrend. We've got bearish candles. H4 is in this downtrend, right? We've retraced back to our smart river. We're in this downtrend. You know, we could draw a trend line along the tops of these candles, right? You get the idea. There's lots of confluence for us to take this trade, and that is why I'm in it. So if there's enough reasons to take the trade, I will take it. And what I'm looking for, guys, again, typically I'm looking to hide my stop loss above these last highs. I'm looking to get a 1:1, and then I will take partial profits and then let some profit run, potentially all the way down to these lows here. So yeah, those are two live trades that we are literally in right now. So yeah, we'll see how they play out. It's ticked all my criteria for the entry. So we're happy with the trade. What else did I want to show you guys? I'm just saying I'm seeing a few people from my Discord. Hi Max, how are you? Jeremy, how are you? No heckling. All right, be nice to me. Okay. Okay. Andreas, yeah, good to see you too. Pound US dollar pullback. Okay. All right, so we can take a look at pound US dollar in a minute as well. Let me just show you New Zealand dollar pairs, right? So if we pretty much pick any New Zealand dollar pair, right, and we go to the daily chart, we know New Zealand, right? New Zealand dollar has been stronger than, you know, Bruce Lee, right? And we've got down to this key support level on the daily. I mean, if I go to the weekly now, you can see it's a pretty key level. And really, we're kind of ranging here, right? And we're at the bottom of the range. Now, if we go back to the daily, I am not typically in the business of going against trend, against daily trend. Because as you can see, guys, this is clearly in a daily downtrend, right? You don't need to be Warren Buffett to see that's in a downtrend. But we've hit a key level of support, and you can see buyers coming into the market, right? So this was also a buy idea for today as well. So these levels are interesting. We're also getting a break of H4, important H4 levels, right? So potentially, I don't like this level through here. I'm still going to need to see a break of this level retrace, but we've got a lot of free air with these New Zealand dollar pairs. The same is true with any of them pretty much. Let's have a look at pound New Zealand dollar. If we go to the day chart, right, you can see we've pulled back to this key level through here, you know, big wick rejection, very oversold, right? So is this the start of some New Zealand dollar weakness? If we look at New Zealand yen, right, we are at a key level up here, all right, and we're starting to see these wicks close back into one another. And we've got a lot of air to trade the retrace, right? This will be against trend, but if I have a big rejection at a support or resistance level, followed by enough room to trade into, then that will be the catalyst for me to trade against daily trend, but only then, guys, right? So yeah, and just New Zealand US dollar I really like as well, right? I'm waiting for a pullback with this. And this will lead nicely into US dollar. We'll take a look at the dollar index very shortly. Let me have a quick drink. Did all you guys get into the World Cup, by the way? A1 is in Atlanta, isn't it? I think there was a few games there. So, yeah, obviously my team was England and Argentina beat us, unfortunately. But, yeah, love the World Cup. America, you did well with hosting it, apart from when Trump got involved with the red card. Anyway, let's get back to trading. So, yeah, I really like New Zealand dollar, US dollar. And I would say this is still in a downtrend because none of these levels are substantial enough. Okay. And clearly on a weekly chart, that would be very much in a downtrend, right? We were kind of here. We broke down. We've come back to this level, which is a key level, right? Again, I just look at facts on a chart, right? And that is a key level. And at that key level, in a weekly downtrend, we're getting daily rejection wicks. And then the final piece of this puzzle will be a H4 breakdown, which we've had. Now, the $1 million question here, let me just put this level in so you can see it. Right, there you go. So that's where we broke structure, right? So you can see the river was green and now it's red, right? We've broken a key level on the H4. Now, do I want to trade from here? Probably not. It's not a deep enough retrace. But if we can get price pulled back in here somewhere and we start to see bearish H4 candles, then yes, I think we've got a nice sell trade on our hands here. And typically, you know, again, not rocket science, guys, right? What I'm showing you, don't overcomplicate your trading, right? So if we break one support level, my target is the next support level, right? So just simple price action is what I trade. And yeah, a technical analyst, guys, all right? So that's what we'll be looking at there. So let's have a look at the dollar index, because obviously we're interested. I'm in euro US dollar sales. I like New Zealand dollar US dollar sales as well, but we need a deeper retrace. So let's take a look at the dollar index and let's go to the weekly. Now, the dollar index is all about this 100 level. It is the big daddy of psychological levels, right? It is. I mean, that's February 23. It was very good support until it broke in April 25, right? It's almost 2 years of holding. And then it's been good resistance until June 15th, right? So it's a fact. That is a key level. And it was always going to be, right? The 100 level when you're talking about the dollar. And if we just simply look at, you know, the weekly, we're in this uptrend and we've pulled back to this 100 level and we're bouncing away, right? So the dollar index is telling us to buy. If we go to the daily now as well, it has been scruffy, right? There's no two ways about it. That price action's a little scruffy. It might want to come down and retest this 100 level, right? And stay in this, you know, this crappy price action in this range. But if we start breaking out of here, then dollar strength for me all the way, right? And also worth pointing out that dollar is a flight to safety as well. Okay, so things with Iran, and I'm in that part of the world, guys, right? I'm in Dubai, so we've been feeling it firsthand. So Strait of Hormuz, Iran, US, if that escalates, we could see some strength in the US dollar. We could see some strength in the flight to safeties like yen, Swiss franc as well, potentially gold. And also, guys, worth pointing out here at that point is this, right? So if you go to the dollar index, just when not the dollar index, let's go to the Nasdaq. And generally speaking, right, if the indices are doing this, then Aussie dollar and New Zealand dollar are strong, right? If the indices are doing this, then these are not strong, and yen, right, Swiss franc, gold, etc., flight to safeties are strong. Okay, so it's important to understand that correlation. But yeah, we're at a key level on the Nasdaq. I know the guys spoke about it before I came on, but yeah, if we break this level, there's a lot of free air here. But it's a big if we break it or not, right? I'm not. If it breaks, I'm a seller. If it holds, I'm a buyer, right? It's as simple as that. But you can see we are in a downtrend here, right? So I'd want to see something like this and a build up of structure, a break of some high, and then I'm a buyer, right? But if this downtrend continues and we break this, very much a seller. So that's what I let guide me, with regards to any asset, any pair. Right, guys, let's have a look at a few questions now, guys. Right, I was just checking a few people off my Discord are not heckling me. They're a terrible bunch in my Discord. I'm only joking. Okay, so a couple of people want to look at pound US dollar. So Modi is pound US dollar on a swing trade. And that's a very important point as well, right? I'm an intraday trader. You can tell by my stop loss and target, right? I'm not, shooting for the stars. I'm typically in and out within 24 hours, 48 hours, and that style suits me. So it'll be interesting to compare pound US dollar from a swing point of view. And if I'm a swing trader, so straight away I know I like pound US dollar sells from a swing point of view, because let me show you this, guys, right? Now again, let's just focus on the facts of the chart, right? And the fact is this: we are in a downtrend and we've come back and tested these highs. We're getting lower highs, lower lows. Okay, and at this key level, you can see it's a key level. Just look at all the reaction at that level. We have had a big wick rejection at that level. Right, now this is interesting because on the weekly, that is a sell trade all day. But if we go to the daily chart now, it's a buy trade. Yeah, not today, but it's a buy trade, right? We're in this uptrend, right? And we're here. Right, we're getting higher lows, higher highs, and this is really good value to start buying, right? And if I was to enter an intraday trade here, I wouldn't be buying any further than this level, right? You could end up looking like a bit of a head and shoulders, right? But I wouldn't push it any further into that resistance. So this would be my target if I was buying. But I'm not. Nothing's telling me to buy pound US dollar. Just look at these candles, right? So, yeah, for me to become a buyer, like I say, if we get some reaction at this level and we start seeing bullish candles, right, buyers taking control of the market, then I will look to take it back up to here. But then and only then. Right, because that weekly is telling me to sell. And while we're talking about swing trading, right, you know, I would look at the monthly chart, right? Because a swing trade to me is you're holding on to trades for some time. And that is a mess. But ultimately, we're kind of ranging between here and here. Yeah, but weekly is telling me to sell. So Modi, I hope your trade works out, but I don't think it's a buy trade as yet. I would need to see some buying pressure in here. What I'd also need to see is some confluence. So that confluence would be a structure break, right, on the H4 as well. So let's say price does make its way back down to that daily low, right? And then I'd want to see this high broken, right? That currently is the last high. We end up getting something like this, and then we break, right? That will be the catalyst for a buy. And you can imagine if we get that H4 structure break, you can imagine what the daily candle will look like, right? It's going to be bullish. So you're going to get that double confluence structure break. There's no better indicator than a structure break, bullish daily candle, and then I'd aim for back up to here. But yeah, not ready for me yet. If anything, I am US dollar strength at the moment. So there you go. Hope that helps. What else we got here? So we've got Voltin. What are your thoughts on US dollar, Canadian dollar? Okay, let's have a look at US dollar, Canadian dollar. So everyone interested in the US majors, right? So please remember what I said about the dollar index. I mean, the dollar index is looking like a buy trade, right? We're getting buyers bounce off this 100 level, although it didn't quite retrace to that 100 level. I even checked that across a couple of brokers. So an uptrend, weekly, right? We've broken, the weekly has broken this key level, right? So yeah, very much US dollar strength from that point of view. So if we consider that when we look at US dollar, Canadian dollar. And also, guys, while I'm at it, yeah, like I said, I've got my own channel, Simply Forex. If you do, if you enjoy my analysis, please come join it. We'd love to have you there as well. Let's start with the daily, because this is how I roll, right? So you're buying US dollar, Canadian dollar. Is that right? Yeah, I'm long. Now, the thing is I know what the weekly candle looks like, right? Just look at that. Do you want to buy into that weekly candle, right? And would you be more confident, right? Just a couple of questions for you. Would you be more confident if price come down to here and then you started seeing a bullish reaction? Excuse my candles, I've been drinking, right? That is a trade. Yeah, we've got a big bearish candle that suggests, you know, selling pressure could take it down to here. And then if we start seeing buyers in here, I'm really interested, right? But starting to buy here against this big bearish candle, I am less keen. Now, obviously, it depends on if you're scalping the 5-minute chart, you don't care about the weekly, right? But for me, and the way I trade, daily direction, H4, H1 entries, I couldn't take that, right? And if you look at the daily, yeah, I don't disagree, right? You've got a couple of really nice bullish candles, right? Buyers have come back, but you can see, right, there's these levels through here, right? Do we want to be buying into them, especially off the back of that big weekly candle? Probably not, right? But if you're scalping the 5-minute, good luck. You could be in a lovely trade. I don't know. Let's have a look at the H4. I'm assuming we've had a H4 structure break, just looking at the daily. Yeah, right. There's this level through here that was holding. Right, you can see it's proven to be good resistance, and we have very much had that break of structure, and we're at a nice level to buy from. But yeah, you know, there's not enough confluence for me, right? There just isn't. I need a lot of things pulling in the same direction, right? And it's not analysis paralysis. It's just the more confluence and more reasons you have to take a trade, the more confidence you're going to have in the trade, right? So yeah, and yeah, try and treat every trade you make as a business decision. And if you was making a business decision, you would do as much research as you could. You would get as much data together as you could. And that's what I do with my technical analysis. I get as much data as I can. Have I got enough confluence to take the trade? Yes or no. I either trade it or I don't. Right? Simple as that. But there is a bit of confluence here, but not enough for me. And it's just that weekly candle. You know, you couldn't get any more bearish than that. It might want to come up and touch that low. So yeah, but again, Canadian dollar at the moment, very geopolitically driven, right? Crude is flying, but even crude's at an interesting level right now, right? I'll tell you what's really interesting as well. It filled that gap, right? That was when the conflict started, right? And it come back and filled that gap, right? The market doesn't forget these gaps. It wants to fill them. And then no surprise, it filled that gap and then it shot off. Gap filling, right, is a strategy on its own, I tell you, right? You know, when you get these daily gap downs, gap ups, especially at the moment with Trump opening his mouth every 5 minutes and all of the conflict going on, and you know, it's all a bit effed at the moment. So, you know, filling gaps is a strategy in itself. Anyway, let's just look at this from a technical point of view, right? We are getting all of this oil strength, very geopolitically driven because of the, you know, bombardment of US on Iran. But we're at a really key level in terms of a support level. So it'll be interesting to see what happens here. Let's drop down to the daily. Yeah, right. You can see it was very good support through here. So yeah, really interesting to see what Canadian dollar does here. And you'll be amazed how many times geopolitics drive price to a level, but technical still kick in, and you know, you'll get sellers at this level, right? We already have a couple of times. So that's interesting when we're talking about Canadian dollar as well. Okay. Yeah, and okay, yeah, and yeah, okay. So he said. So Louisa wants to look at pound Aussie dollar. Cheers for that, Tom. You're very welcome. Pound Aussie dollar. Okay, let's have a look at pound Aussie dollar. Right, I've got a couple more minutes, guys. So yeah, let's just look at this. So let's do a top-down approach. And Louisa, this was one of my trade ideas for today, and you can see my alarm in here. So Louisa, I hope you were also thinking of selling this. Great minds think alike. Yeah, right. We've clearly had a structure break. Right, you can see price was coming up. You know, whether this was a significant enough low or not, this definitely was. Right, and we've broken that low. Right, we're getting lower lows. Sellers have taken control. Right, we're in a downtrend, and the close of that candle broke all of this support and resistance through here. So yeah, I really like this for a sell trade. And again, we've got lots of room to move into. Right, we like free air, if there's such a thing on this planet. Let's drop to the H4. Yeah, and you can just see my level that I will be interested in. Right, I talk a lot about value. Right, so when you get these big push down, I'm not going to start selling here. Right, there's like zero value in doing so. But where I do want to sell is the retrace. Right, a retrace by definition means you're going to get in at a better price, and it therefore represents value. right? That's key for me. If I don't have value, I don't trade it. So this is where I'm interested in, back down to these lows here. Yeah, you can see our Smart River could catch up here. And if I get that double confirmation, double resistance level, really interested. If price just does that, then I don't have a trade, right? I don't suffer with FOMO. That is absolutely fine, right? I don't have a trade, no problem. But if we do pull back up into here and we start seeing selling candles, right, I'm very much a seller of pound Aussie dollar. So it's just a case of waiting for that pullback. All right, guys. So yeah, I believe we're going to have the next guest on now. Thank you very much, A1, and all guys at A1 for having me back on. Always enjoy coming on, guys. Hope you enjoyed it, and I'll see you same time next week.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Whoops. Thank you, James, for that, my friend. Okay, I was muted. Let's go ahead and see what has happened to the market. Long time no see, everybody. Thank you. Thank you, guys. No audio. Yep. All right, we're seeing some DXY softness here being reflected through dollar yen, dollar Swiss, dollar CAD there. So looking for a pullback opportunity on dollar CAD, looking to go long and hedge that idea of a continued escalation. And speaking on that, something fresh that we just saw. It was about on Truth Social. From this point forward, anytime the Islamic Republic of Iran shoots at a ship in the Strait of Hormuz, the U.S. will bomb one bridge or power plant. So we'll see how that goes. But you know what? Let's see. When was that? 86.8 on oil. Where's oil now? 86.8, 86.8, 86.2. So it is lower from that headline. So market's not really taking that. In fact, you are getting back into this level of could be support, could be resistance, depending on what happens here today. But this is that line in the sand for me. If you have oil trading above this upper level here, then you are back into that uncertain re-escalation territory when it comes to the Middle East. If you see a solidified kind of hold at this level and continuing lower from here, then this is just a break and retest. Or a break or flush lower with a pullback, retesting this level and then continuing lower. So we'll see what happens if bears have enough steam to go ahead and take this lower. I'm kind of up in the air with that, though. I don't really know, to be quite honest with you guys. So if you do see oil higher, then of course I'll be piling back into dollar longs. And if you see oil continuing to cool off here, then that fuels the potential story for rate holds or rate cuts. And then in that case, of course, that gives me just even more conviction for gold long. I like gold long a lot. In fact, you had a couple technical looks here. For example, gold here on a 4-hour chart, you could have looked at this trend line here and seen this break, right? So you got this break, which is good for the upside. But then you also, if you remove this one and look at the one that I have on my chart, which is a daily chart, you zoom out here, you also have this bigger long-term break as well that we've just recently been through as well. So I like gold to the upside right now. It's trading higher despite higher oil prices and higher yields, which is interesting. So, I think that the market is pricing in and front running the idea of that the war is going to be over eventually. Don't worry about it. We'll get to it when we get to it. Okay, so that's kind of my thought process there on gold. Silver has been catching up as well, doing quite well today, up 1.71. Bitcoin here is softer today, which I don't like to see. I want Bitcoin to continue higher. That way I can eventually short it. I'm looking to short Bitcoin at 72,000, 70,000 ish, somewhere right here, as close as I can to that 200-day moving average, and then trade it to 50,000. That's kind of my thought process on Bitcoin. What would happen to the world if it hits $600 per barrel? Oh my goodness, I don't know, man. I think $600 a barrel. That's crazy. Honestly, in an odd way, I think a lot of money would pile into gold at that point. Just because it's finite, it's a better store of value. If you got $600 barrel oil, man, you're gonna have insane inflation. The dollar will, yeah. Oh, we must all swap to EV at that point. Nah, man, at that point, we gotta head to Mars. That's crazy. Oil to 600. Hope that never happens in my lifetime. I will say that. It's crazy because when you're talking about oil or petroleum, 1,000 inflation, it's not just cars and gasoline and stuff like that. Like, it affects everything. Like, a lot of products that we have that we use on an everyday basis has petroleum in it. So it's like inflation everywhere. Like, for example, like when it comes to like food processing, right? Especially in the US with all the additives and stuff that we have, there's hints of stuff like petroleum in their makeup as well has petroleum, like everything. So it would be a bad thing, and that's why inflation is not just like a gasoline problem, and you can just escape inflation by going to like electric cars. Like, yes, that's one kind of thing in an overall basket, but everything is affected by oil prices. Clothes, polyester, yeah, everything, literally everything. It makes the world go round. Please check USD JPY. What's your take? Okay, here's my take on USD JPY. Let me see if I can articulate this the best way I can. USD JPY has a natural ability to drift higher. Okay, the reason for that is because of the rate differential or the carry trade. So you buy or borrow in cheap yen and park it in higher yielding US dollar, right? Let me show you this on the Edge Finder. Let's go to Edge Finder and you go to the carry trade scanner. Let me show you what I'm talking about. Okay. And I think the quote currency now in Japan is 1%. So keep that in mind. So it'll be 2.75. But you can essentially, by being in USD JPY longs, you will get paid either 3% or 2.75% every single day. So it's like a risk-free trade, basically. As long as the trade is break even or better, you're collecting that yield. And so for a long time, people just, leverage money by borrowing money and parking into USD. And that keeps this trade alive to the upside, right? When you're talking about currencies and what moves currencies, the backbone of it is interest rates. For example, if there is a change in rate expectations between Europe and the US dollar, Euro US dollar will move because of that. If there's a change in difference in rates because of Australia and the US dollar, it will change. In fact, this part right here, when Aussie dollar was going from here to here, that is because the Fed was looking to cut rates going into 2026, whereas Australia was looking to hike rates into 2026. And so that change in interest rate projections was what propped this thing up. So going back to USD JPY, it has a natural ability to drift higher because of the interest rate differential. Right now, you have another added kind of tailwind that's bringing USD JPY higher, and that is going to be the war in Iran. So because of the war in Iran, inflation higher, that increases the rate odds for US, but it also gives the US dollar a safe haven status. And so money flows into the US dollar because it's essentially less risky than the other currency peers, and it's also providing you a high yield. And so that's like an added tailwind to USD JPY higher. What this means for Bank of Japan. Well, Bank of Japan or Japan doesn't like dollar yen to be too high because it obviously means that the yen is very, very weak, and that hurts their everyday consumers in their economy, right? People buy less, they travel less. It's a lot of things. And so they would prefer a stronger yen. And so the higher that USD JPY trends higher, the more pain Japan feels. And so they do what is called intervention. Okay. They can artificially sell dollars and buy yen to bring this rate lower, right? They did it here. In fact, they did it in April 30th of 2026 when they brought USD JPY down by 400 pips, 2.4 points, or yeah, 2.47%. So 400 pips lower. However, that is an artificial move. It doesn't fix the structural dynamic that carries this thing higher, which is the rate differential and the war in Iran. So with Japan and the MOF and intervention purposes, they can artificially bring down dollar yen if they want to, but it would be deemed worthless because if you see what happened in April 30th, they brought it down, but then the structural dynamic of the carry trade and the dollar safe haven ultimately erased that whole move and some, and now we're even higher. So with dollar yen, Bank of Japan likely will not intervene meaningfully until those drivers start to fade off, until one, the war in Iran is over with or through with, and also two, when the Federal Reserve is now in a holding stance or even dovish stance. Then at that point, it would make sense for them to intervene because then it probably won't drift as high again, if that makes sense. Halen, I took AU at 0.7 bounce today and as a cover on my USD buys. Where do you see there? To the long side or downside? I took it at 0.7. I'm assuming short side to cover your USD bias. Let's see. Structurally, I mean, you haven't breached this high here, so that's good. You know, if you would have took this to the long side, it looks pretty great. And I was talking about it too. Level support, 200-day moving average right there. Literally hit it to a T. Now it's up there. And I think too, also, if you're looking at this, top setups, AUD USD is very bullish. So I think the path of least resistance, Max, is to the upside on this pair. Just my thoughts. To the long, yeah, then you're in a great spot. You're in a great spot. Anticipate some drawdown probably, right? If you get a pullback, and I would say buyer step in on the pullback. So me included. Like if you were to get a meaningful pullback in AUD USD, I would probably long that, you know? So that's kind of my thought process on AUD. I like it to the long side. And you know what? That's being reflected through my bias with gold as well. Like I think gold to the upside is still the case. And I even think that dollar to the downside could also be meaningful as well. The only thing is you have the war in Iran. So, like, again, I keep saying this, but like you have the fundamental drivers pointing to the downside on the US dollar. They're pointing in that direction. However, you have this blanket worry of the US Iran conflict that is keeping the dollar bid up. But if you just remove that variable out of the picture, then everything starts to align again. Before we have Marco join me here, I do want to say one thing as well. We do have an offer for you guys. So we have the Telegram. We have lots of things that you guys can take advantage of. ACAP being one of them. If you are looking for a new brokerage, ACAP has a 20% welcome bonus for a limited time. So if you want to just click that link there to go ahead and sign up for that, make sure it's the right firm for you. There are a lot of options out there, but ACAP is very, very well spoken for. Very, very good brokerage. So if you're looking to maybe switch relationships with a broker, ACAP could be a good choice for you. Also, too, there's a promo where you can get the Etch Finder for free through ACAP, depending on your deposit size. So there's special instructions there. So just go on our website or go into the ACAP right there. Make sure you're following them. And I promise you'll be in good hands. Aren't you tired? I'm not tired. I just woke up. I woke up a couple hours ago. It's morning for me, and I have a cup of coffee waiting for me downstairs whenever the time is right. And I have water too. 1.4 0290 on the RCAD. 0290. Where's 0290? 0290. Oh, okay. So like a revisit of this low right here. Sluggy, I think you're on something, man. I think you're on something. Somewhere within this level. We'll see. We'll see. You're getting a reject here of this level of resistance. So this was resistance here. You broke above it. You're starting to roll over. So you got the break. You got the retest. Hopefully to the downside. So yes, 0290 looks good. I would love this 0.395 though. If you can even breach this and get even lower, I'm hopping in that all day long. Pound Aussie been in since 1.9068. Let's see. Are you short or long, my friend? Short or long? Pound Aussie, Louisa. 1.9068. 1.9068. Where are you? 1.09. Where is that at? Did we even tap into that today? So right here. So you must have bought right here. I think Pound Aussie, for now, is kind of tilted to the downside. I think. It was very bearish the whole entire beginning of the year. Starting to flip. It didn't surpass that level of resistance, nor that 200-day. No thoughts on Pound Aussie, man. My bad. I can't even see it on the edge finder. If it's not a bullish or bearish reading, I wouldn't really pursue it. Aussie dollar long side is getting a bullish reading, so I would say that. To the long side. To the long side, you're kind of in the middle of the range, man. At right here, buying right here, kind of in the middle of the range. I could see that. I could see where your eyes are going, though. I could see you're probably looking at something like this, right? So we'll see. We'll see. Pound and Aussie, both very strong currency pairs, so that makes it difficult. Marco, how are you, man?
Hello. I'm pretty well. Took a new trade. Already feeling a bit better.
You feel better?
I don't like being flat.
You scratched the itch?
Yeah.
What'd you take, man? What'd you take?
I took USD CAD. So I was talking about it yesterday. I think the next pivot, the next thing to do is to buy the dollar at least this until the end of this month. It's small risk, so it's not a bunch of risk because my conviction level is not that high. But USD CAD, I think, is the way to go to bet on a strong dollar. I do see that gold is starting to break out. It broke a key trend line, which is really interesting to see. But yeah, what are you watching for today?
I'm watching gold, man. I'm watching gold. I think I'm becoming a gold bug, like everyone seems to be. You know, I feel
so
like
you have crossed to the gold side.
I think I've been initiated.
Okay, so I can expect like 100 comments from Alan saying "do gold, do gold."
Gold buy or sell every second of every day. Yeah. What I'm gonna do after this stream is I'm gonna go into other live streams, trading live streams. I'm gonna have like 20 tabs open. And I'm just gonna do gold buy or sell.
That sounds fun.
Yeah.
That does sound
and then
fun.
I'm gonna have Claude, whatever is reverted back to me, I'm gonna have it traded. So I'm just gonna have a bunch of gold buy or sells.
Yeah,
I like.
So you'll be
gold
flat on gold essentially. You'll have like 100 buys and 100 sells.
Yeah. The brokerage is gonna love me though.
Absolutely.
So this is what I'm looking at, Marco. Something tells me that, I know I've said this before and I've been wrong on this.
Okay.
But something tells me that the market is pricing in still, like the stock market did this before, but gold is ignoring the Middle East and gold is ignoring oil. Okay. So my thought process is like, okay, the market's pricing that in. Maybe there's something that I don't know, or maybe I could also position myself that way as well. So I like gold to the upside. And if I'm going gold to the upside, then that means that likely dollar to the downside. So
okay. Yep.
That's kind of my thought process where I'm at right now. So for example, I was talking about who was it? I think it was Max. Yeah, Max went long Aussie dollar. And I like Aussie dollar too. In fact, I liked it right here when we tapped into that 200-day moving average, and we literally tapped it to a T and this level of support, and we're continuing higher. So I'm kind of curious that if we were to get a pullback in Aussie, I would like to take an attempt at that. Also, too, very bullish reading on Edge Finder, +7 score, which looks pretty attractive to me. So I'm kind of leaning that direction where I want to go long gold, probably long Aussie dollar. Dollar CAD, I like it to the long side too if I want to hedge that idea, right? If I want to hedge that idea, I like USD CAD to the upside. The question is do I buy it here? Do I buy it here? Or do I buy it here? That's like my question, and I don't have that answer. There's a lot of conflicting things. Like oil pop today, it's trading a little bit lower. It's still green on the day, but it's rejecting what seems to be anything in this area. In fact, you had some like escalatory comments from Trump, Truth Social, saying from this point forward, if Iran shoots a ship, we'll burn down a bridge or a power plant or something like that. And so the price of oil is lower than that headline. So that headline came out and oil was at 86.80, and now it's at 86.50, which is cents on the dollar, right? But still, it's not continuing its momentum to the upside. So I don't know why that is. I don't know why, but it seems like the market is just in that position stance where like they're front running the idea that it's going to be over and it's going to be not too big of a deal. I don't know.
Yeah, do please play the smallest violin for my silver trade, which got stopped out by, I don't know, 2 points before it went up. So
dude, silver's been on the tear for like the last couple of days, man. Like,
yeah, I bought it, I don't know, maybe last week, and that wick that you see basically took me out before it went up. So a bit tough to watch, but part of the game. At least my ChatGPT bought some gold, so some of my prop accounts are in the green when it comes to gold. So awesome. That's positive. But yeah, I'm still sticking to the same methodology. Strait is closed. I'm thinking it remains closed. This time, Trump is not being positive at all. He's being super negative, super escalatory. So I'm not seeing why the strait would reopen anytime soon. Yes, they're talking about new pipelines, which are going to take like 2, 3, maybe even 5 years to build. So in the short term, it's going to be a definite spike in oil price. Spike in oil price is a spike in inflation, and a spike in inflation is going to be a Fed hike, essentially. Sure. So a rate hike from the Fed. If you look at some historical examples, usually the first move of a new Fed chairman is a hike. So I think if you look at the last 6 or 7, if you look at the last 6 or 7 chairmans of the Fed when they came in, so I think 5 of them hiked rates as their first move, and only 1 of them actually cut. So the methodology being like the Fed wants to reestablish credibility and say to the people, look, we're serious about inflation. We're going to put it under control, so we're going to hike. They hike, and then later down the line, they turn super dovish. That has been the pattern. So that's something I'm betting will happen this time as well. So one sort of insurance hike from Warsh and the gang, which is now supported by the data as well, I would say, because of the elevated oil prices. So I did a pivot. And in my first segment, I got a comment. Someone said, like, you guys are always flipping from bullish to bearish. Every single day you're doing a different thing. But I would say the most successful traders in the world pivot in a second. So the expression is strong opinions held weakly, not weak opinions held strongly. Because if you have a weak opinion, for example, if you're bullish gold from January 2026 and you have been buying from the 1st of Jan, you have blown your account by now. So you need to pivot, and the fastest trader to pivot will make the most percentage, because he will catch the initial part of the move. That's kind of my answer to that. What do you think? Is it better to be fast on your feet and be fast to pivot first to an idea, or have a clear conviction and then trade around it for let's say as long as you can?
No, definitely be fast on your feet. I would say the argument that people throw at, like, for example, I see it a lot in comments, like surrounding the A1 channel and the community members, but like the flip-flopping, right? Like, I think a lot of people don't like the flip-flopping because they don't know how to flip-flop, or they don't know what to look for to flip-flop, you know, like, like if you look, man, like, if you're going on the beach, right, and you're destined to get in the water, right? Person A is destined to get in the water. Person B is destined to get in the water. Person A has a radar for sharks, and person B does not. Person A is going to go in that water, and when the radar flips on and says, "Hey, danger," you're going to turn around, and person B is going to be committed, and continue going forward. It's same thing with macro, right? If you know what the macro implies and what the consequences is for certain things, right? Elevated inflation, a higher dollar, right? So flip-flop,
Yep.
right? You're not going to commit to a short dollar stance if you have obvious elevated inflation right in your face.
Absolutely.
With CME Fed Watch telling you right there, right? So I think the kind of the scrutiny is more so not because flip-flopping is bad, but just because they don't probably understand why the flip-flop. You know what I mean?
Yeah, they probably don't have enough experience to know why it's done and how it's done. But I know a trading story. Basically, Brent, who I closely follow, went when he was, I think, 30 years old. He went to visit a bunch of hedge funds, and like the main thing that he noticed, the main pattern was that the guys that run these funds, they were long on dollar in the morning and short on the dollar in the afternoon. So like no one knew what those guys thought because they were so quick to pivot. And that's one of the secrets of a successful trader is finding something that is an opinion that is super unpopular and putting size on that opinion. And once it pays off, it pays off. You know, the saying is, if you're a trend trader, 10% of your trades make for 90% of the profits. So I was listening to a podcast when I was in the gym today, and the guy basically said super successful trader, has been on the leaderboards of tournaments, trading tournaments for a couple of times. And he basically said, I have 10 trades per year that make all of my profits. If I didn't take those 10 positions, I would be negative for that specific year. So that's the game. You know, that's the game. You try to find those 10 big winners, and the rest of the trades are just break even, small losses, small winners, just testing it out, putting probes.
And they'll come, man. It's crazy. Like you kind of feel it when it is that time where you have this like conviction and the balls to go through with it, you know, and put some size. Like Lance Breitstein. I don't know if you're familiar with him. His biggest career trade was like 8 figures or something crazy. It was 2024 Bank of Japan, and he said that whole year was just like flat. It was boring, and then all of a sudden you just get something like that where you commit to it, and then there you go. It's like overwhelmingly by a large margin, like his biggest trade, and then his second biggest trade is like way over here. You know. It's so disproportionate.
Yeah, and also one way to determine good market conditions. So if you come to the screen and you find yourself scrolling through your whole watch list, looking at hundreds of different instruments and trying to find a trade, that usually means you should stay out. But if you come to the screen and you don't know what you should buy or sell first, if there's like 15 trade ideas that look great, that's the best time to be trading. When you have an abundance of trade ideas and when you don't know which you will buy or sell first. But weeks like this one, when you're trying to dig out a trade, usually not the best time to be putting on size. You can get in, you can satisfy the itch, you can put in small size, but best to stay out if you can.
For sure. One thing, Marco, that's on my mind that I'm going to be watching here is Bitcoin to the short side.
Okay.
You told me yesterday that this move here has been kind of quiet, but I do like the slow drift here. Are you also on the what are your thoughts on considering not just like what's going on with the bond yields in Japan, but also other factors that influence Bitcoin that I may not know of? What is kind of like the rundown on Bitcoin that you would say I should be looking out for? Risk to the upside, risk to the downside.
That's a good question. First, you have the halving cycle. So don't ask me what the halving cycle is because I don't know, but I just know that it's a cycle of 4 years. And looking at the past data from 2013, we are now in the bearish part of the halving cycle. The bullish part is going to start in November this year. So that's when we expect some sort of a recovery in the price. We are below the 200 EMA, not a good sign. If you open up Twitter, it's pretty quiet when it comes to crypto, not a good sign. Stocks are doing well. Lately, they haven't been doing well, but in 2026, stocks have been doing great. So a lot of capital was squeezed out of crypto and put into stocks, into AI, into technology. Again, another bearish sign. So most of the stuff is pointing bearish to me. To be honest, I'm not seeing a clear reason for Bitcoin to go up. I think we also, another negative, the current correction is 55% from the peak to the trough. If you look at past data, corrections have been 70 to 80%. So I think we still have some room to go lower. And we still haven't seen the capitulation, the sort of the hatred for crypto that needs to happen before we can recover and go to all-time highs. I'm talking about everyone on X saying that crypto is dead, that Bitcoin is done, that you should sell all of it, and being super, super pessimistic. So I think we're waiting for that to happen, and then we can go up. And also MicroStrategy, like, I don't think that they will survive this cycle. I think they need to disappear before we go to ATH, before we start another bullish cycle. We need to shake out all of the trash, if that makes sense.
Okay, that does make sense. So it's a matter of what it sounds like is like a little bit of deleveraging, right, from the MicroStrategy side of things.
Yep.
Then the extreme, sentiment of it, like you need to reach that peak pessimistic outlook on Bitcoin and other things like the halving cycle, things to align for it to really make sense. So you're not getting any of those right now.
You did get one thing. You got one crypto. I think it's called the crypto DAT, D-A-T. It's basically a derivative where they were selling Bitcoin for like 2x or 3x or 4x the actual price. Same thing that MicroStrategy did. So it was easier to buy if you were in the US because the regulations were much different for that sort of a company than just buying straight up crypto Bitcoin. But they were basically scamming people and selling crypto at a massive, how would you say, bump in the price, right? So basically they give you one Bitcoin, but you pay twice the Bitcoin price. A big one blew up, I think, this week. So it's a sign that deleveraging is happening, which you mentioned. But we need MicroStrategy to pop. I think we do. I don't think like Saylor will survive, or his company. He will survive, but his company, I think it's gonna basically disappear before we can go up.
Gotcha. Did you watch the interview yesterday?
No, sorry, I didn't. I had a full schedule, but I'll put it on in the gym. Yeah. Make sure to put it on in the gym.
So hilarious. He was going at it with Michael Saylor.
I do like Vlad TV, so I'm gonna have to listen to it.
Bro, Vlad is a goat, man. I've been watching Vlad since like 2014, 2015, like every now and then. Yeah.
And he's actually an investor. He always mentions that he has some gold, some stocks, and this and that. So it's actually a bit of a finance channel as well.
So with all of the drama. One of his big wealth creators that he mentioned on that podcast, Marco, was Google. And we do have Google earnings coming today. Google, Tesla, IBM.
Oh, that's today.
A lot of big names.
Okay.
A lot of big names coming up. What are your thoughts on that? IBM particularly has been bleeding. And it still continues to do so here. But what are your thoughts? What are your like some attractive levels for you from a medium to long term stance on these big names? We'll
start with Google. That's a really good question. Yeah, that's a really good question. Let me just pop up my screen. So let's go to my screen. Let's go to my stock screener. So a lot of earnings, which could be good for the general market. Personally, my methodology for trading stocks is that first thing I need to see to do anything with stocks is I need to see the SPY be above the EMAs. So above the 50, the 20, and the 10 EMA. That signals an uptrend. We opened inside of the EMAs, but we are now crossing above them. So that's a good sign. Now, most of my positions are executed 1 hour after the market opens, so my window is slowly closing. I'm not seeing any significant breakouts. I'm only running 2 positions, one in Best Buy and one in Crocs. By the way, for GH, I got taken out for a profit actually, but I think I'm happy to have gotten out from some.
That's Guardian, right?
Yeah.
Okay.
I think I'm happy to have gotten out after some of the things we talked about. behind
Yeah,
the
make sure
screen,
you're selling that thing now, okay?
so managed to get out for a profit there. But the rest of the market, it looks flat. So there is some sign of life in the SPY. I just need to see it go up a bit more. If you look at the mags, so if you look at Google, for example, the EMAs are not looking great. So they're turning down on the daily chart. Price seems to be starting a bit of a downtrend. So I don't like it as far as Google goes. Let's see the earnings today. Also the SPY is trying to break out, but it's still very flat overall. If I had to give you a stance, I would say I'm very, very patient.
Yeah.
And I would be more active if we actually broke out. So if we got some all-time highs, that would make me flip the script, and I would go heavy. On some of these names, buying breakouts basically. So that's how I see it.
Stocks are grinding. I like Google at the 200-day moving average. But
Okay.
stocks are grinding higher, man. Also though, propped up on a lot of really good expectations, and so I'm curious to see if those expectations are broken or not. And then from there I'll proceed. But I like Google at the 200-day. Marco, I'm going to pivot out here for you. Thank you for letting me go over here into your portion of the segment. Have a blessed rest of your day, man.
Sure, no worries.
And we'll talk tomorrow.
Thank you, Alan, very, very much for joining. This was pretty fun, and we will see each other tomorrow.
Alrighty, bye-bye.
Yep, goodbye. See you. Okay, let's continue with the regular program. So, let's see. Max says we're getting about something about the Clarity Act, which is connected with crypto, although I don't know much about it. Fun fact, the US government blocked it because they don't like the line about not allowing government to speculate. That's probably Trump, right? Trump is a big player in crypto. He was supposed to be the crypto president. He was supposed to be the savior of the crypto world. He kind of screwed us. So when he took office, this happened. Okay. I mean, he didn't screw us. It was basically buy the rumor, sell the news. So going into his sort of inauguration, or what's the name? I don't know. But basically him coming into office January 25, it was buy the rumor, and then it was basically sell the news, or just chop the news, be choppy after news. Which chair are you using? That's a good question. It's an IKEA chair. So it's behind me. See, I don't know the name, but don't buy it. It's shit. Okay, any chair from IKEA, any office chair is shit, overpriced, overrated. Just get something that doesn't look so great but is comfortable. So this one does look cool, but it's so uncomfortable. I need to get a new one. Watch list. I have USD CAD. I did take a trade. So this is a new position for me. It was a signal in the A1 Discord. So I do want to remind you, if you want to join the A1 Discord, there is a link in the description, and you can use the code Marco to get a nice discount. So join us. You get all of my trades, Nick, Chris Pulver, Iwind, Alan. So it's the best Discord in the trading space. No doubt about it. It's not just us, not just the mentors. It's all of the members as well. I'm talking about Sluggy, Max, and all of the other guys. I won't go through all of the names. Rev, Ballout, always an amazing contributor. But yeah, a bunch of really good traders in there. So it's not just some stupid SMC, ICT, losing money all the time traders. It's either Biden or Trump. Whoever takes the president will be screwed up from all the decades of mismanaged money spending. Donald Trump got it unlucky. I don't know. I don't know much about politics. The US is running a massive debt. Under Trump, it's increasing, but pretty much under every single president, it has increased. The Iran war has already cost $36 billion in taxpayers' money. Do with that information what you want. I'm going to go back to the charts. So USD CAD, in this trade, the bet is basically the straight is closed again. Straight is closed, so oil is going up. Oil is going up, so inflation is expected to go up as well. If we look at the economic data, inflation, CPI, look at what happened the last time that the straight was closed. 3.3, 3.8, 4.2. Then we had 3.5. That is true. But we had a lower print because the straight was open. So here straight was open. Here straight was closed, closed, closed. Here was open. Guess what is going to happen now that it's closed again? We probably go above 4%. We could even go above 5% in the long term, which means the Fed is going to have to hike rates. I think the current pricing of the Fed is pretty accurate. So if you look at by the end of this year, so what do we have? No, for September, 55.7% chance of one hike, 17.9% chance of two hikes. Look, two hikes are not going to happen on September. So they're not going to hike by 50 basis points, but one hike could very easily happen. So I think it actually does print, which is going to push the dollar up, and that is going to make USD CAD go up. So that's the position. I thought about which currency should I pair the dollar with. Should I do the yen? Should I do the Aussie? Should I do the euro? Should I do the pound? CAD seems like the most logical solution because the Canadian dollar is pretty weak. They're struggling with some stuff. The housing market in Canada is not doing well. The unemployment rate, okay. The unemployment rate for the CAD is going up. So the country is not doing well. The numbers are not healthy. The numbers are kind of falling apart. So that's a big red flag. By the way, if you're asking why should you listen to me, well, I can show you my track record for this year, which has been pretty good. So I'm down for July, but I'm up 14.83% for this year, which I think is pretty good for a retail trader. Okay. So if you want to join the A1 Discord, get all of my trades, all of my signals, use the code Marco, and there is a link in the description. What's your take on gold being at long-term gold take up? Bullish. So my long-term gold opinion is bullish. Yeah, bullish, basically. So I think this goes up, maybe not in the next 2 to 3 years. Do remember that gold has periods of decades where it does nothing. Check this out. And this could easily happen from 2020 to 2024. So 1,230 days of nothing. Look at this. 2,640 days of nothing. You may look at this chart and you may say it's not going to happen again. I have news for you. It will happen again. So 3 years, we may be range bound, but in the next 10 years, we're going up. Okay. If the world does not fall apart, we're going up. The same thing with the S&P. If the US doesn't stop being a country with a massive civil war, it's going to go up. So just the way that markets work, if the underlying companies or assets or civilization survives. So for me, it's a pretty safe bet, because if the world falls apart, if there's a civil war in the States, if there's a nuclear war, money is not going to be worth anything anyway. We're probably going to be dead. So why not just buy the S&P, buy gold as a long-term investment? Not financial advice, but why not just buy it and make some percentage? Because if it does drop to zero, the world will probably be a lot different. Okay. Oil updates, bullish. So as far as oil goes, I think it just goes up. The Strait of Hormuz is closed. It's just, for me, it's a logical direction that it goes to the upside. I do want to mention the sponsor of today's video, which is going to be Ola Prime. So if you're looking to get funded, we have a 20% discount code for you. Ola Prime is a sponsor of the show. So Ola Prime is 20% off with A1 Live, with the code A1 Live. So if you look at Ola Prime Trustpilot, it's pretty good. And the first thing you need to do if you're looking at a prop firm, look at the reviews. 4.5, 2.8K reviews. I would say that's pretty good. They don't have a consistency rule on some account types, which for swing trading is massively important. If you have dealt with the consistency rule in the past, you know what a pain in the ass it is. So Ola Prime, massive advantage. And if you compare the pricing to some of the OGs like FTMO, Ola Prime is definitely cheaper with our code. So link is in the description. Link is in the comments. Do take a look. Alan says gold is now bullish on the Edge Finder. That's good to hear. I did try and take a stab at silver and got stopped out. This was my silver trade, got stopped out by a couple of points, and then it went up. So personally, I'm not going to be participating anytime soon. I would rather see it break the 200 EMA and then get in, because the saying is nothing good happens below the 200 EMA, but that's just me. So let's see what happens. That's it from me. Thank you very much for watching. I wish you a great rest of the week. You can catch me tomorrow, and do not go anywhere because we have Tiger coming on in 30 seconds. So thank you. See you in the next one. Goodbye.
Don't go anywhere, traders. The show will be right back with our next show host. But before we get back to the show, I wanted to mention today's live stream sponsor, Ola Prime. Ola Prime is one of the fastest growing prop firms that I've seen in the space, and they offer a super wide range of different account types. Whether you trade Forex or futures, whether you're a swing trader or you're a day trader, they have multiple different account types, and they have some of the most competitive pricing that I've seen in the industry. And check out this publication from Deloitte, who did an audit during a select period of time on Ola Prime and its payout legitimacy. One of the big things that Ola Prime is well known for is their very fast payouts. They have this posted up all over their website as one of their main reasons that traders like them. From what we've seen, they also have a very strong reputation overall within the trading space, and they are a proud sponsor of our everyday trading stream here. And for a limited time, if you use our promo code that you can see on the screen right now, A1 Trading, you can get 20% off any of their accounts. And using our discount code lowers the barrier to entry, meaning that your challenge costs you less and gets you that much closer to potentially getting a payout someday. Of course, to throw my 2 cents in there, I'm a big fan of not trying to get funded until you feel you are actually ready to do so. So if you feel you have the skills, if you feel that your trading is up to par, and you do your due diligence on Ola Prime to see if it's right for you, then make sure use our promo code to get that extra discount at checkout, and we'll be dropping the link to them down below in the live stream chat. You can also find it in the description, and we'll have a QR code on the screen right now that you can scan if that's easier for you as well. So thank you to Ola Prime for sponsoring today's live stream. Now back to the next show.
What's going on, everybody? Happy hump day. Happy Wednesday. Hope you're doing well out there. Yeah, as always, guys, please let me know if you have any specific tickers that you're looking at. I got a few ideas over here. I was just looking at the data from today's cooler CPI for the pound. I think that's like 3 or 4 in a row for them. So it didn't really affect the overall strength of it from a fundamental perspective. And of course, I do believe we also had the claimant count come in pretty good yesterday. So still maintaining that 60% beat rate over here for the British pound. Obviously, the pound has dropped probably as a result of the new politics that are going on over there, but their stock market's still looking pretty good. So I'll attribute that to Larry the Cat. up holding 10 Downing Street over there, but it's looking pretty good from a UK standpoint, getting some nice spikes up through some supply zones. We are starting to bounce into some of those old mitigated supply zones overhead, though. So that's kind of where we sit right now. Just wanted to kind of throw that out there as we continue to find out the rest, I guess, of their cabinet for British politics. So as far as Edge Finder goes, yeah, like they said at the very end, gold is back on the bullish list. So there we go. Definitely want to go take a peek at that. Still have a few jobs numbers kind of going against it, interest rates, the GDP as far as the US data is concerned. But overall, hey, we've gotten a nice little swing. So I'm going to be interested to check out gold over here on the asset scorecard real quick, just to get an idea of a little bit of the trend of the scoring over here. And if we go down here, if I can get out of here, you can see where we were heavily bearish there for quite a while, went back to neutral, and now we are peaking up. So is this the beginning of the gold turnaround? We shall find out. As far as the way I'm looking at gold right now, and I got a bunch of lines over here, so allow me to explain what all these funky colors are over here. I had told you guys that at absolute bare minimum for me to want to start looking for bullish signal or bullish buys, assuming Edge Finder does turn around, which now we have clarification it has. At absolute minimum, I would want to see this turn into a impulse move to where it breaks above this recent daily 4-hour supply zone, whatever does remain as far as the filled order potential here, just above this wick and below the excuse me, the distal line of the daily supply. So this again was at absolute minimum, guys, absolute minimum. And even then, I would still think that might be a little aggressive, because I don't really look at this whole area as like a big, as a big impulse move. I feel like I have to include the whole thing. So if I'm just looking at this on a 4-hour chart, that's why I kind of drew this extra green line up here. Ultimately, to be extra safe about this, I would think we'd want to get a break and close above the next overhead supply zone on a daily time frame. Now, that's a ways away. But out here in the middle, there's even another one. So I wanted to kind of hone in on this area here, just so that you guys see what could possibly be landmines. Okay, it's not to necessarily scare us away from the bullish signal that we now have. But if I go to a 1-hour time frame and I start digging in right here on this supply zone, this 1-hour supply zone, one thing I just wanted to point out is from here, we had a very, obviously, very nice gap away from price, closed this gap over here, little retracement, and then it kept falling. So that was really the start of that 4-hour, what I would constitute as a bearish impulse move. But the big thing here is the volume spread analysis at the very bottom. A couple big red candles on both of those leg out candles from Wednesday the 17th, last Wednesday. And that would have been just afternoon here in the States. So I don't want to run the risk of that trying to turn around a trade. So that's partially why, going back to my 4-hour, and again, that's that same 1-hour zone, still got a big yellow candle even on the 1-hour time frame over here. You know, just to be a little extra safe, I would prefer that we get through the rest of these supply zone landmines, not only the one with the 2 red VS candles on the 1-hour time frame, but the 4-hour supply we have here, and then the daily that's wrapped around it. I think that would be the ultimate, like, most conservative approach, starting to prove itself that that change of character has some legs on it. So then we can then at that point, obviously look for our retracement to a newly created demand zone. Now, I don't know where to draw this box yet because we don't have one yet. It could be up here in the middle. It could be down a little lower. I don't know yet. So this is the ultimate buy point for me on this retracement. Somewhere down here. Is it here? Does it turn into a former resistance becoming support? Is it a little higher where the former resistance from those 2 1-hour candles potentially becomes support? I don't know yet. So again, I think that's the most conservative. But again, it's still feasible. It's still feasible to possibly at least break that one series of structures right there. I'm just looking at the impulse move as all this right here, as far as the bearish impulse move. So I don't know. I'm kind of torn, to be quite honest with you, between, between waiting on this to get taken out, or just getting a little aggressive. Perhaps I just go in with a smaller size down here. Up here would be a little more of a regular size trade. Does that make sense? So it's just an idea of having a little, if I have a little less proof, perhaps a little less confidence in the minor change of character, maybe that's a little bit of a partial position. But if we break the major structure, that's where I have a little more confidence in the pullback. So hopefully that's not like too crazy or too confusing, but I'm really just kind of looking at those two scenarios personally for gold, depending on which series of structures it decides to break and retrace from. If it, because somebody asked me this morning on another stream I was doing, well, what if it gets here and it just keeps going? Okay, that's fine. That'll only strengthen my confidence if we do continue through these structures up here, close, and then obviously look for a retracement at that point. So the point is, I don't want to be buying breakouts here. I don't want to be buying breakouts here, and especially up here, because I want to get a discount on whatever it is it gives me. So, boring to say, but we say it a lot. Just got to sit on my hands. Okay. That's I'm not going to stop, but let's see what you guys got over here in the chat. Bombus. So yeah, YT 6317. Yeah, I don't know. Nobody knows. Again, I'll just wait and see where it goes to decide to determine where the heck I want to get in. And let's see here. Somebody put euro dollar, I think, about 47 times. So I'll still go ahead and take a look at it here in a second. Going back over here to the top setups, euro dollar still on the bullish list. Pound dollar still at the very top. Yeah, pound dollar, guys, I'm still going to wait on that extreme drop. I just don't see any point personally with the way I trade and getting into any of this nonsense here, because I've got my swing low, my major swing low, my major swing high. So if I'm looking at just the curve analysis point of view, I got way too many lines on this chart, guys. Forgive me for all this. Get rid of some of this. I don't need all these older lines up here, I don't think. Still looking at the swing low, swing high. I'm still looking at the curve. So all this and that, including that demand zone that I told you guys about yesterday, was even higher on the curve. In fact, it's in the middle. Right. That was that 2-hour zone I initially told you guys about that I was okay with possibly taking because we were getting the strongest score on pound dollar, but we just never got the trigger candle. So I stayed safe. If I don't get a trigger candle, I ignore it. Even going all the way down to a 15-minute time frame with that same zone. Just didn't get a trigger candle. Nothing. Okay. So that's an easy one to just let slide on through. So the next spot I'm looking at is still going to be down here at the one that I initially liked the best anyway, the 132.56 area. See, I drew this zone up whenever we were still in this area here. And especially once we kind of broke through some of these tops, that's where I was initially looking for the pullback to this zone here for possible buys, but it just kept going. So, when price consolidates, breaks through and kind of bounces off another area, that gives me a little bit of permission on a smaller time frame to look at this swing low, swing high a little bit more locally. So that's why I was looking at this this curve analysis there for a short while. But yeah, ultimately the higher time frame usually went out on this stuff, and that's why I'm waiting for that zone all the way at the bottom, guys. So stayed safe, happy about that. I didn't break my rules. That was pound dollar. Somebody asked about euro dollar. It's a little more bunched up over here, in my opinion, guys, as far as euro dollar goes. And not to mention, the trend is still not my friend on euro dollar. EMAs are still pointed downwards, lower lows, lower highs. That's the big difference between euro dollar and pound dollar. See, pound dollar has broken through some of this consolidation, this ugliness over here. So that was the whole point of why I prefer pound dollar easily over euro dollar. So just not a fan of euro dollar right now at all, unless we start breaking some structures to the upside, look for some retracements. So sorry, I can't really help you on the euro dollar because I'm personally fixated on the pound dollar. Kiwi dollar was the other one I was interested in, though. And we have, well, here's the thing. So I drew the yellow up saying, hey, I wanted to break these structures, the rest of this structure, to get a little bit more conviction on this retracement. But as you can see, it's starting to pull back because of the supply zone. Supply zone's grabbed it. It's been mitigated because it got touched all the way back here. It's getting touched the second time, but the second time, what happened? What happened on the second go around on a 4-hour? Or 2-hour rather. 2-hour, we bounced into the 2-hour supply. And that's basically a little bit of the catalyst as far as why we're getting that retracement. Just looking at it on a technical level. So forget fundamentals for a second, sentiment. This is just technical saying, hey, that's the second set of eyeballs in the same spot on the chart with unfilled order potential with gaps over here pushing down. So that's currently what we're getting. We're getting these structures broken partially because of that second set of eyeballs pushing price down. So so for me to get into this Kiwi dollar trade, which I like probably the most because I do believe the Kiwi is still our stronger of the currencies. Yeah, tied with the yen. Or no, it's at the top. Well, tied with the yen. Okay. So Kiwi yen, 83% beat rate on the red folder events, high impact economic news pieces. So that's why Kiwi dollar is my favorite. And then of course the dollar at the very bottom here, just from a fundamental perspective. But just to finish over here on the technical side of things for a minute. Does that mean that this ixnays this trade idea? No. It just means I may not put in a full position because we didn't get this. We got this. We didn't break structures. We didn't break and close. So I'm at this point just waiting on this yellow line to kind of work its way down. Come back down. Let's get a little manipulation happening in this area. Some shorter time frame changes of character to the upside, because on the way down on a smaller time frame, that's going to be a miniature downtrend. So if I can get a break of structure to the upside and then a final pullback into demand, that's where I would be personally probably placing my order. So as always, not financial advice, but that is what I'm looking at. I just have to change my plan a little bit because it did not break and close. So for that, it's a simple change. It's just a little bit less risk. That's all. So that's Kiwi dollar. Let's see here. Biggie Dub. What's up, Tiger? Can you peek at pound yen? Yeah, I could do that. Why not DCA buys on GU, but still manage the overall risk stop loss? You could do that. I just personally like to I just like to unload within the zone itself, because the zones for me is where the banks have their ultimate last point of buying or selling as far as scooping up that last bit of unfilled order potential. So I personally just wait on the zones themselves. I miss a lot of trades, to your point, because I don't dollar cost average in very often. Sometimes I'll do it if I have some zones fairly close together with just a little bit of space in between them. But if it's a situation like pound dollar, I don't like any of this area. I don't like buying here because this demand zone's already been touched. It's already been mitigated. So whenever price comes into a demand zone, it sucks up orders. So the second time price comes back, there's less orders there to potentially get sucked into to push price up. So zones, guys, supply and demand zones are not the same. I know maybe you hear the contrary to this, but supply and demand zones are not the same as support and resistance. They don't operate the same way. Because the whole idea behind a supply or demand zone is to, when price enters the zone, to utilize those unfilled orders that have not yet been touched to push price up. So for me, it's a one touch only on a zone. It's got to be a fresh zone. If it's mitigated like this one here, this 4 hour, yeah, technically it didn't make it to the 50% midline, but I'm extra picky. A lot of supply and demand zone traders will still buy so long as price didn't get to that 50% of the zone. And again, this one does qualify for that. I just don't do that. I want to have 100% confidence in a zone. So I want to see 100% of the unfilled order potential there when I enter the trade. So this right here would have been the trade to enter right here back on July 13th. I don't think it's a bullish signal at that point. So that's why I avoided that. So that's a no-go for me. Yes, it is touching it a second time. And perhaps when we get below this wick, perhaps we do get a second bounce. We very well could. Okay, we very well could get below that line, suck up some more unfilled orders for a buy. But I just don't personally play that game. I go for grade A setups, and to me, that's a grade B. Does that make sense? I hope that makes sense. But yeah, I could DCA in there, but I just would rather unload my chamber down here. That's the way I kind of do it. Give it a decent size stop loss and just full money it in. Just let her go. Just let her rip, tater chip. All right, you asked about pound yen, so let's go have a look at that. As always, guys, take a look at the scoring. +7 over here. So it's not the greatest month for seasonality. We do have another, 8 or 9 days left in this month. We'll see what happens in August for this particular box here. But for now, it's not giving us a great look. PPI. So it's really just the 2 boxes. Got a lot of neutral readings. You got some pretty good scoring though as far as the fundamentals. 1, 2, 3. -1 is 2, 3, 4, 5, 6. So you got 6 points of economic strength for the pound over the yen. So that's pretty good. It's pretty good, guys. No real help, nor no help or issue with sentiment. So it's pretty well straight up zeros. And then, of course, it's telling me we got a good trend. So I like it. Very bullish, +7. I already know I got an uptrend. So look at here. Got higher highs, higher lows happening. We got EMAs pointing to the upside. Broken structure over here from April 30th. This thing's just well on its way. This thing's looking good from a trend perspective. So I don't even have to worry about that. We can go back over here to our intermediate time frame, which of course is the 4-hour for me. Daily for trend, 4-hour for supply and demand, 1 hour for honing in on the smaller time frames. Okay, so on a 4-hour, I am looking at this. I got a daily 4-hour confluence down here. It's a little deeper, 215.5 looks like. Got my alert set right there. We have some liquidity areas in this area. Right here. We have liquidity areas over here. So buyers pushing price up. Smaller time frame, guys. This is a break of structure to the upside. It's a break of structure even on the 4-hour, but especially when you go down the 1 hour, the 30-minute, 15, it's a break of structure. Break of structures, remember, it takes a lot of money. I say this a lot, but it bears repeating every other day. It takes a lot of money to break a structure. So if I know that, this is an impulse leg. Impulse legs often have liquidity under them. Stop losses in this example is going to be sell orders because these are buy orders pushing price up, sell orders down here for their protective stops. Same thing over here. Price comes back, forms a double bottom. That in itself creates liquidity. And then you have another break of structure after we broke in this one here. So same thing. Another impulse leg, meaning stop losses, meaning sell orders. And what does a bank need to fuel their buy orders? They need sell orders. Sell orders from the liquidity, sell orders from the zone itself. Because we're typically looking for that last red candle before the big screaming green candle to the upside for our demand zone. So for me, that's what I'm looking at. Let's go back over here to the daily and fix that. Messed up my lines. Got to have my lines right. Go fix my magnet tool over here real quick. I'm picky. Got to have my lines exactly where they're supposed to be. There we go. All right. Reset. Back to the 4-hour. Pull this all forward. 4-hour daily confluence, guys. Suck up liquidity here. Suck up liquidity here. Suck up liquidity here. But before we bounce into that, I would really like to see this thing start basing out a little bit. And that's where the manipulation happens. That's what I'll be watching. Now, I don't know exactly where I want to put my take profit yet, because perhaps we get a new supply zone created in here that just gives us a big, ugly red candle. Well, I don't want to avoid that. I want to take that into consideration. If that happens, look at my take profit in this area. But if we get just ugliness, slow descent, efficient price structure without gaps, well, then I'll just look for a take profit at the very top. So remains to be seen on that, but that is definitely the spot I would personally be watching on pound yen. As always, not financial advice, but that is a 215.5 area. So one of your quasi psychological numbers. Okay. The halves are nice, but the whole numbers are the best ultimately. You guys know this. Okay. So that's pound yen right there. What else you guys got? go take a look over here on some more top setups. Yeah, dollar CAD, that remains the only bearish. Not really a good look for me personally, guys. We haven't yet broken this demand zone down here. This was what I drew up several days ago. For me to be ultimately excited about shorting this, I wanted to see a break of the daily demand in it. What happened? What did the daily demand do? It grabbed price and pushed it up. Now, part of that was aided by, by some of Canada's misery of late. But, you know, a very, very aggressive thing to do would have been to short this supply zone, which you can see we technically did get a little bit of a bounce. But that's a no-go because we did not break the daily structure. A zone I trade has got to take out an opposing zone or an opposing structure. So swing lower, swing high. Preferably on the higher time frame side. Daily, 4 hour. At minimum, I wanted to see a broken zone structure there because this gives us our daily gap after our daily consolidation. We did it. It gave us instead a bounce. This is a good look to start with, bouncing off that overhead supply, but it didn't have the strength, at least not yet, to break the daily demand. So until it does this, I've got no interest in shorting this. Yeah, that's about the best I can put it. Plus, it's just a -4. It's not like it's a -9, -10. So I don't know that it warrants getting ultra aggressive because of the scoring over here. CAD, we went over a pound. Aussie dollar, I don't think I have any interest in that one because I was looking at that one this morning and it's closing in on some overhead zones as well. So it has the benefit of bouncing into all these demand zones down here and getting a push up. You could probably even cross your eyes and find a little bit of zones in here, but I didn't care for the volume, so I wasn't really that worried about this particular cluster of candles. But up here, and really not even so much this one, because it's not like we had big VSA candle on that red candle, that red daily candle coming out. Is that a yellow candle at the very bottom? No, that's a green candle. So that one may not even provide that much of an issue. But it's still a zone. The zone doesn't have a gap. So daily, I don't think I'm worried about it at all. If I go to a 4 hour and look at that same daily, yeah, see, that's a smaller time for. Oh no, that's the daily. Let's go to a 4 hour. Yeah, here's my 4 hour. This was where I would have been if anything, the most worried about. A lot of candles to the left, but the leg out candle gave us a yellow VSA candle. So I have to be aware of at least that point as far as a potential landmine. Where if I'm buying long, because that's what EdgeFinder's given us, I just don't know that I'd want to trust that zone. So let's break that structure and then maybe retrace down, and I might be interested in this on Aussie dollar. Break structure, change a character on a daily, and then look for this retracement. So it'd be drawn up like this. Pull out the daily a little deeper, plus the 4 hour that we have. So that's kind of what I'm thinking on that one, on Aussie dollar, but it's got more work to be done. Do I want to buy just because it touches the 4 hour? No, I want to buy after it touches the second set of eyeballs, which is the daily. So that's my look on Aussie dollar. It's got some work to do. Guys, I'm picky. If it doesn't take out a zone, if it doesn't take out a structure, I don't feel 100% confident it's that strong. Even with volume, even with a big yellow VSA candle or a red candle, it first has to prove that it's at least changing character to the opposite side. You can make a living off that. But if we're doing anything other than that, if we're still trying to buy within this series of lower lows, lower highs, in my opinion, it's still catching a falling knife. Now, I look at it on a higher time frame than most. So, what's catching a falling knife for me may be, you go down to some smaller trends. Okay. Go to a 1 hour. That's clearly an uptrend. So it's a little different, but I just look at things on the higher time frames, try to follow what the banks are doing, guys. Obviously, if you scroll way out on a daily, this is up, but I'm more interested right now in this most recent down candle. So that's Aussie dollar. Let's see here. I got 2 minutes. What do you think about gold? I just talked about it, my friend. Yeah, if you would just go rewind to the first 10 minutes of my segment. There's two options over here. It just depends on which one of these structures it breaks. This is a aggressive break and retest. Okay. So again, aggressive. And I'm just picking on you, by the way. But yeah, aggressive. This is an aggressive break retest. Break retest. This is a little more conservative, in my opinion, because of the structures. I think this is more of a minor structure because this structure, if you think about it, didn't break any major structures below, did it? It came down to this 4-hour demand zone right here. I didn't draw it in, but it came right to that zone, which caught a bid and pushed up. So I don't even think I even care about any of this anymore. You know, now that I see all this, it is nice to see the scoring pick up. Let's break that. Let's break those 2 1-hour red VSA candle zones right there. And even more conservatively, break the daily 4-hour and then retest. That's what I'm looking at for gold. Okay. And again, we all have different trading styles on here. So if it makes sense what I do, great. If it doesn't, if what one of the other guys says makes more sense to you, that's all that matters, guys. That's the beauty of this stream, is that we all have different ways to get to the same point or very similar points. So if you don't like what I do, if you don't like what some of the other guys do, you know, perhaps you'll pick a nugget or two from each of us. Doesn't have to be our whole trading strategy, but you know, that's what I would challenge you all to do. Just start watching all of us on here and figure out who talks to your heart a little more as far as trading, you know, from a trading perspective. Because there's so many of us out there, and we're just here trying to do things by the books as much as we can, best we can with our eyeballs. And while it may be different strategies, we're all basically trying to do the same thing. So it just matters what it just matters what talks to you guys and what makes more sense to you. So I'm supply and demand by the books, fundamentals, sentiment, supply and demand on the technicals, all in that order. So ladies and gents, we've reached the end of the show. We've reached it. I hope you have a wonderful hump day out there, and stay safe. And we'll be back same time tomorrow. Peace.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.